This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Donald Trump needs a weak dollar.
I don't hear too many bullish cases for China in 2025.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Trump took steps on everything from TikTok to the southern border.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene and Paul Sweeney, Michael Barr, Lisa Mateo. Let's go right to Amanda Agati's note, Paul, because this says everything that can possibly be understood about equities, bonds, currencies, commodities. Quote, baseball season hasn't started yet, but the market is acting like it's late October.
Okay.
That really describes a week, doesn't it?
Yeah, it does. We've got a little bit of a lift here on the screen here, but the futures haven't been very predictive of the day's performance here. But it's jobs day today, Tom, so we'll be all over that at 8:30. With the jobs data.
With the Sweeney Mass, folks, you got to understand it's 7,000 square feet. I mean, he's back on the west side of the house and he can't see the tide. At your house, do you hide from your cell phone?
Yes, of course.
You don't want to know what the news is.
Don't want to know what the news is. So we'll see here. But again, a lot going on out there, Tom. I mean, the tariff is still front and center. Moving all over the place. Markets trying to adapt to the news coming out of Washington. And then again, the labor, we'll get a good shot at the labor market here today.
Needed. And what I would really focus on, folks, is the zeitgeist right now led by Anna Wong of Bloomberg. She will join us later, which is, do we see DOGE numbers today? Lisa has an opinion, we don't. But the answer is, you see Costco came in a little light?
Yep.
She missed one trip to Costco.
I know, that's the quarter right there.
That's what did it. But the answer is, folks, there's a lot going on here. We've got a wonderful lineup. Claudia Sahm and Ellen Zenter spearheading the 8:30 moment for us. Futures, they lift right now. Wait 20 minutes. Futures up 17. The VIX out to 26. Solid 25 yesterday. In a little 24.69. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
Yeah, we got futures rebounding with the tech-heavy NASDAQ 100 down almost 10% from its peak. The S&P 500 on track for its worst week since September. Stocks really took a beating yesterday after big shifts in U.S. trade policy. Today, Paul said it, the focus shifting to the U.S. jobs report, 8:30 Wall Street time. So right now, NASDAQ futures up 0.4%, S&P futures up 0.3%, Dow futures up 0.2%. We have the two-year yield at 3.95%. That's little changed. And the yield on the 10-year, 4.26%. That's down 1 basis point. We have the Bloomberg Dollar Spot Index down 0.2%. This morning, chip stocks rebounding. Broadcom up 11% after AI growth fueled this upbeat forecast. Then we check in with NVIDIA. Their shares up 1.5%. ASML, their ADR is up 2%, and ARM up 1.5%. But it was quite the opposite for Hewlett-Packard Enterprise. Its shares down 19%. Yeah, its outlook trailed estimates. And then we'll stick with tech here. Meta planning to launch improved voice features on the Llama 4 AI model in the coming weeks. Financial Times says it's trying to make the conversation with the user a little bit more personal. There you go. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. We welcome all of you again across the nation on your commute up to this 8:30 moment in 90 minutes. And on YouTube, growing each and every day. I learned something today. It's Bengaluru. Bangalore is like
Bangalore,
Bombay,
right?
like
Sure.
And it's been literally 20 years of changing the name to what Indians call it. Good morning in the Silicon Valley of India as well. I got to work on the pronunciation. I'll get there. Amanda Agati starts us strong. What a wonderful guest list today. And we start with PNC Bank's Amanda Agati. Okay, Amanda, it's baseball. The Red Sox look awfully good right now. How is our economy and the linkage to the stock market if you say we're hyperventilating like it's October?
Well, it's great to be with you guys. I had to get my baseball analogies going for you this morning here. So we are feeling a little bit of anxiety, maybe more than a little bit as it relates to the markets and the economy. But I really think that this all comes back to extreme fiscal policy uncertainty, tariff and trade policy in particular. And so if investors could simply hit the mute button, I know that's really hard to do, I think it could change the sentiment backdrop and the narrative pretty significantly. We just day by day, we're seeing this extreme volatility in terms of policy, and it's really hard to take a longer term view with that kind of volatility happening.
So what do we do to the extent that folks need to be in the equity market? Is it a focus on quality, whether that's quality balance sheet, quality free cash flow? How do you guys think about being positioned in this type of market?
Yeah, I mean, believe it or not, we're not raising a ton of cash, pulling the ripcord and moving to the sidelines. We really are trying to stay focused on long-term goals and objectives for our clients. Sometimes that's hard to keep everybody invested and well diversified in times like this, but we are absolutely leaning into quality-oriented exposures. I mean, you have to say U.S. over international, given the swirling news around trade policy. But there are some pockets of opportunity there. And I think, the uptick in volatility that we've had has actually given investors an opportunity to reposition portfolios. So that's the good news, bad news of what we're dealing with right now.
On a philosophical basis right now, as we all sit with, we're going to sit with Barron's and a cup of coffee tomorrow morning and go, are you kidding me? Amanda, do I want to buy a quality name that's gone down a little bit and get on board for 2 years out, or do I want to buy something that's gotten hammered and get on board for 2 years out?
I think you want both, which sounds like a cop-out, and I don't mean it to be at all.
Do we let people on that say both?
I say both, yeah. Buy both in terms of optionality there. I think we're very focused on making sure that in this environment, investors are staying very well diversified. When you have big swings in terms of policy in one direction or another, it's really a binary kind of outcome. Really hard to invest against that backdrop. You can easily get caught flat-footed. So I'm a buyer of both in this environment, in the spirit of trying to stay very well diversified so that we can catch these tailwinds from a policy perspective when they ultimately go into effect.
So, Amanda, the S&P 500 is really sitting right at its 200-day moving average. Historically, that's been a buying opportunity. Do we have the courage to do that here?
Absolutely. We haven't had this kind of opportunity in a while, actually. The last few years, the market's done nothing but go straight up. And so I think there's been a lot of investor complacency as a function of that. Volatility has been really low. All you really need is broad-based kind of beta exposure in the last couple of years. It's a different environment this year. And so I think the ability to be nimble and be more actively managed in terms of portfolios, it's not that I don't want some passive exposure, but I think active really rules the day in 2025 here.
If we get a growth slowdown, Amanda Agati, do we get money market funds coming down to, dare I say, 3.9%? Are we just going to see a lower return on cash?
Well, I think if we do get a growth slowdown that forces the Fed's hand to do some more rapid rate cuts than what's currently planned, I think money market yields do come down. We've been saying for a while now, even though the path towards looser policy is a bit slower than what maybe we expected 6 months ago, cash is never an investment. It creates optionality. And so we've been talking with our investors about how to reallocate and redeploy that cash either into short to intermediate duration exposures and fixed income or some of the pockets of equities that we just talked about. So I would not be sitting on a lot of cash in money markets on the sidelines here.
So, Amanda, in terms of fixed income here, do we sit there in the 2-year Treasury at 3.94%, or do we take some credit risk here?
I actually am a believer that the cycle has legs to it. So even though we're in the middle of this growth scare from a cycle perspective, I actually think the underlying fundamentals of the economy are still very sound. And in particular, on the credit side of the equation, no material default cycle. We're not seeing signs of stress building there. Credit spreads are fairly well behaved. So I'm a believer and a buyer in some credit here. I think from a duration positioning standpoint, we like the belly of the curve. That 5 to 7 year range looks a bit more attractive than the short end. So a little bit in investment grade, a little bit in credit. Again, that's a diversification kind of story for you.
Amanda Agati, thank you so much with PNC Bank for getting us started here on this Jobs Day. What I know for certain is when I look at equities, bonds, currencies, commodities in this turmoil, you look to foreign exchange. For all of you across the nation on YouTube, Jane Foley now with Rabobank on currencies moving. Jane, what is the pair that speaks the most volume now given this turmoil?
Well, I suppose it's got to be some of the euro crosses, but perhaps the surprising one really has been Stocky. We've been talking about Stocky before, but the Stocky is the best performer in the in the day today. It's done extremely well. It's hit our mid-year target already. So that's the outsider here. But I think we really should be talking about the euro. We have seen game-changing changes here in Europe this week, which really does bring the potential of a real step up in a potential for growth from fiscal stimulus, in Germany, and that of course would have implications for the rest of the region. So that's got to be the currency, that's been most interesting this week.
Yeah, Jane, Paul and I agree. Yesterday was historic. I mean, it was absolutely. There's no other way to put it, with Lagarde speaking, and I was going back to her Jackson Hole speech to reread it. But I look at Euro Stocky. This is the euro versus Sweden. Let's just begin with basics. Why is Sweden so strong? Is it a nominal GDP bet?
Well, it was strong already. It's been outperforming this year really quite well. And that's because they had a recession and therefore they got into their interest rate cutting cycle early. And that means that they're finishing that interest rate cycle early and their growth prospects really have improved this year. So that was the basis. That's why it's been outperforming, having underperformed for years, for the last few years. So it was doing well already. But, Sweden's a small open economy. And if there's going to be fiscal stimulus in Germany, well, that's really going to help with the outlook for Sweden. So it's outperforming there. But so part of it is the euro story as well. But there is some strength in Sweden by itself.
Yeah, Paul, I emphasize in umpteen years of doing this, I've never had these conversations.
Right.
I've never had like a euro pop. How about euro exceptionalism? I'm inventing that this morning.
Exactly. So, Jane, we were trying to get the euro to parity for our European traveler, Tom Keene, but that is out of the picture right now. How strong can the euro go here in the near term?
Well, I don't think this is going to be necessarily all one way, because we know with Europe that there's a lot of politicians here. There's a lot of different countries that there can be delays. And even if you think about the huge changes that we've had from the German coalition to be, we've got to remember that that's got to go through Parliament by March the 25th, because in order to get those changes through, he needs the composition of the Parliament that was voted in 2021. Now, of course, there were elections last month, and a lot of seats went to the far right, to the far left, who would probably oppose some of the changes that have been proposed by the new coalition to be. And that means that there could be legal challenges. That means that there could be delays. And so from that front, it's possible that the euro is seeing a bit of a sugar rush with some of this optimism, that some of that could be disappointing. Also, on the other side of the coin, the market's got, been talking a lot about the slowdown in the US economy. It's going to be very vulnerable to today's payrolls data. But if there is still a sticky inflation in the US, the Fed just won't be able to cut as much as maybe the market's hoping right now. And that, on the other side of the coin, could give the dollar a little bit of more support. So I don't think we can rule out 105 seeing it again, but certainly the trajectory for the euro has certainly improved.
Jane, does President Trump want a weak dollar?
Well, had you asked me that during his first term, well, I think it was clear that he did, certainly because, he's been looking towards trying to fix the US trade deficit, and a weaker dollar would clearly, textbook help that cheapen US exports. But it did seem that some of the questions in the campaign trail last year seemed to adjust that view. And instead, he seemed to think, well, maybe tariffs would be the answer to fixing the US trade deficit. And that may leave, the dollar there as a strong currency that would be still, the reserve currency of choice, because he has also threatened countries that could move away from the dollar with extra tariffs so that they won't do that. So his rhetoric certainly changed a bit. And I think really, if the tariffs, are some degree successful in adjusting that trade imbalance, then his focus is off the dollar.
The Japanese yen continued strength down here below 148 here. What are your thoughts on the yen?
I think the yen, I've been saying it for months, I think the yen is on course, still on course to be the best performing currency in the year to date. There is going to be a little bit of strength, though there is right now, and there probably will be into the next week or so, because the market's wondering how hawkish the Bank of Japan can be at the March Bank of Japan policy meeting. I mean, surveys suggest that Economist thinks that they won't hike interest rates again till the middle of the year, maybe not even till July. But there is this fear that maybe they could go just a little bit earlier than that, and that's why the yen is picking up even more steam right now. But the fundamentals of Japan, are really interesting. It's not just about interest rates; it's what's behind that. It's about the reforms and the want of the Japanese government really to get investment away from cash, further into assets. Buffett, we know, has been there for the last few years, and he wants really to get, or the Japanese government want really to get other investors back into Japan. And that, if it works, is a fundamental change.
Jane, with Rabobank, you people do tons of commercial relationships and commercial transactions. How does business in Europe adjust to this new landscape? Can they re-hedge here? I'm fascinated by the behavioral change Rabobank sees away from your FX strategy.
I was talking to a large corporate yesterday, yes, looking to hedge, having to hedge all of the time. And, this increased volatility makes me busier because obviously they've got even more to consider, but they will have to do it. They have to do it. In terms of the euro strengthening, obviously, for many, that puts them in a better position. But those guys that are have got trading relationships with the US. There are lots of different complications, lots of different things to consider in terms of their supply chain. So it's quite a trying time for many of our clients.
I mean, this is great. Jane's going to have such a banner year. She's looking at a pile down the road from Blenheim Palace. That's what she's doing. Jane Foley, thank you so much. Brilliant at Rabobank. Always there. Really, we got to remember, folks, that in foreign exchange, there's a whole world away from what's the euro going to do, business transactions and hedging, and that's what Rabobank is known for. Jane Foley, Amanda Gotti, thank you so much for getting us started on this Jobs Day. Futures up 17 with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump exempted Mexican and Canadian goods covered by the North American Trade Agreement from his 25% tariffs, offering major reprieves to the U.S.'s two largest trading partners. Trump signed orders Thursday paring back the tariffs, which are related to illegal immigration and fentanyl trafficking, until April 2nd. Meanwhile, speaking to reporters in the Oval Office, President Trump denied the tariffs were the cause for the stock market turmoil.
Nothing to do with the market. I'm not even looking at the market, because long term, the United States will be very strong with what's happening here.
China's top diplomat accused President Trump of taking a hypocritical approach to bilateral ties and denounced tariffs. Foreign Minister Wang Yi said the U.S. shouldn't return good with evil or even impose arbitrary tariffs on Chinese products. The World Health Organization is offering early retirement to some employees with 4 months' pay to cut costs following the U.S. withdrawal. The offer is voluntary and targets staff who are 55 or older with a departure date of July 15th, and is part of the WHO's efforts to plug a significant funding gap. 2 U.S. Army soldiers and a former soldier have been arrested and charged as part of an alleged bribery scheme to try and sell military secrets to China. The 2 current soldiers were stationed at Joint Base McChord in Washington. SpaceX launched its Starship mega rocket on a test flight from Texas last night, but the spacecraft broke apart minutes after liftoff. SpaceX lost communication with the rocket, and then it exploded. Flight commentator Dan Hewitt.
Can confirm we did lose contact with the ship. Unfortunately, this happened last time, too, so we've got some practice at this now.
Wreckage was seen streaming from the sky over Florida. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Some guy was on a plane with his Swanson TV dinner. He's looking out the window, and all this stuff is coming down. Is there Michael, in your reporting, is there any tension that stuff, like a fin lands in a backyard in Orlando?
Well, obviously, when you see something like that going across the sky, I mean, it lit up the sky for a moment, the nighttime sky. Fortunately, no one was injured in that.
And they're going to say it's way up high. It melts before it gets here?
I don't know. I mean, I think
we go to astronaut Paul Sweeney.
Yeah, you got to start looking up these days. When you go outside.
Well, they paused like takeoffs from Florida airports.
Yeah, I saw that. Yeah,
so.
because it was right there. Yeah, so and the sky gets more and more crowded with more and more stuff in the sky.
First thing I did, Gura had the Gulfstream, so and we were okay. But I don't know. I saw all that. It's like the second time. It's like, okay.
Yep.
Does he get a free pass on stuff falling out of the sky? I don't know. It's Jobs Day. A great lineup for Global Wall Street. Please stay with us. Priya Misra will be with us here.
Ooh, in studio.
In studio as well. And that's always a wonderful thing. The market's moving in a direction, but I don't think the why was quite why.
No, and we'll see. I mean, the future. What's been interesting is the futures market has not been that predictive of how the cash market trades during the day here. So people, when it opens up and we have to process all that news.
Great to see Dan Ives yesterday.
Yeah.
Tesla, he reaffirmed a buy on Tesla today.
Yeah, it's tough. Its stock's down 35% year
It's down
to date.
263 to 260 right now this morning. I mean, I did a log regression back to the beginning of the pandemic, and it's below the trend line.
Yeah, so there's a lot of cross currents there, and
I don't know. Do you see a lot of them?
I do. Like more. Oh, yeah, absolutely.
Mrs. Keene somebody has one for sale for over half off.
Oh, okay. Yep.
It's Jobs Day. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures rebounding. This is after President Trump's trade tariffs caused some confusion. You had the Fed's Raphael Bostic said it could take several months to understand how Trump's policies will affect the economy. Today, investors move to jobs data. Yes, economists expecting that the U.S. added 160,000 jobs in February. That's up from 143,000 in January. They think the unemployment rate will stay around 4%. We shall see at 8:30 Wall Street time. We've got NASDAQ futures up 0.2%. S&P futures up 0.1%. Same for Dow futures. The 2-year yield 3.94%, down 1 basis point. The yield on the 10-year 4.25%, and that's down 2 basis points. To commodities, spot gold higher, $2,921 an ounce. We go to Brent crude up more than 1%, $70 a barrel. WTI crude $67 a barrel. And the Bloomberg Dollar Spot Index down 0.2%. You have sales for the record label for artists like Taylor Swift, Billie Eilish. Well, topped estimates in the fourth quarter thanks to an increase in subscribers. We're talking about Universal Music Group. It's up nearly 4% in Amsterdam. Then we go to shares of Gap. They're higher, up about 16%. Strong sales. Yes, it is, because you have Gap, Old Navy, Banana Republic. They were all doing better. They all reported better. Athleta, though, was the only brand that reported lower, posted a decline in that. Costco, yes, I had to save the best for last, but it's down 2%. I know. Profit missed estimates.
Did they say why? Seriously?
Supply chain costs. That's what they're talking about. Yes, yeah. But I've been there. The lines are a little bit shorter. I gotta say.
Okay. There you go. That's the most important thing I've heard all week.
Yep.
That is your Bloomberg Business Flash.
Lisa Mateo, thank you so much. Priya Misra hasn't been in Gap in 20 years. Joining us now from JPMorgan, Priya Misra, as we really begin our Jobs Day coverage, and there's so much to talk about. What's the mood at your office? I mean, within the fabulous cafeteria they have at JPMorgan, it's like $150 for lunch. It's across Park Avenue underneath Citadel. But, at lunch, what's the mood? Is it like chaos?
There's a lot of debate. There's a lot of debate.
Yes, thank
There's
you.
a lot of analysis. I mean, this is a historic week. We're living in historic times.
Thank you.
I could do with a boring day, but we haven't quite had those. So in the US, we're clearly dealing with tariff uncertainty, tariff on, tariff off. We're also looking at, I think the market had an assumption that there are growth negative aspects of the administration, but there's a lot of growth positive. We're looking at what are those growth positives. The sequencing is important. When are we getting something on taxes? We potentially might have a shutdown next week. So I think there's a lot in the US that we're looking at, policy risk, fundamentals of the economy, and then what's happening in Europe. I think cannot underestimate that.
So Paul and I on commercial break, we're calling our brokers saying go to cash. What's the plus minus for Priya Misra of JPMorgan now of the gut instinct to go to cash?
So I know cash feels good because you get that 4% yield. Here's what cash will not do for you, is give you any diversification benefit. So that's why we've been seeing inflows into fixed income, but you just have to look at price action, whether it was DeepSeek Monday or Tariff Tuesday, I guess Tariff Wednesday, Thursday as well, or today if you get a weaker payroll report and risk assets struggle because, you know, the president said little discomfort. I mean, I think some of us might be feeling a little more than that, but I think they're telling you that their pain point is not here. So you need something that'll help you stay in risk assets, fixed income, high quality fixed income duration. Actually, that's what's going to work because the market's only pricing in a few cuts here, right? Even though the Fed is not likely to start to cut rates anytime soon, market's forward looking. And if the economy is slowing down, if the uncertainty shock is enough to increase the risk of a recession, the market can price in many more cuts. That's why interest rates have been falling. So I think if you're in somewhat 3-year, 5-year, 7-year duration, you don't have to go too far out. Intermediate bond funds will give you that diversity. They'll actually make money on a day if risk assets struggle.
And how much credit risk are you suggesting people take here?
That's fair. I think we are moving a little bit up in credit. So we have reduced some of our high yield positioning, just not necessarily that we're looking at recession. I would argue risk premiums should be higher. Okay. If the uncertainty is high, distribution of outcomes is higher, as risk premiums increase, I would say investment grade corporate, even securitized credit. So yeah, we wouldn't shy away from credit risk. You just have to do a lot of work. You talk about what we're doing at JPMorgan, a lot of research, because what we're seeing is the dispersion within credit is increasing. High rates, uncertainty. So you have to be really careful. You buy the companies where you like the business model. You think the balance sheets can withstand the uncertainty.
So I guess your credit analysts, are they now modeling maybe a little bit slower growth and seeing how those credits perform in a slower growth environment? Not a recession, but maybe a slower growing?
Right. I think our base case has downshifted a little bit in terms of growth because we're looking at this uncertainty as something that will weigh on growth. But we're also modeling in, you know, do you have a lot of government aspect in your business model? Do you have a lot of foreign input costs? Because if tariffs are going to raise revenue, tariffs are not just a negotiating tool. In that case, and we have April 2nd coming up. So I think what we're putting in a scenario basis is a lot of the policy risks in there and then seeing who can withstand it better and sort of trying to focus on those sectors.
Right. What can equity people learn from the Priya Misra fixed income space right now? You're lecturing a bunch of equity animals. They're dumb as wood. They wouldn't know a logarithm if it hit them over the head or the formula for duration. What do you say with them? There's a lesson to be learned out of fixed income.
Well, I would say equity investors have done really well the last 2 years. And
2 years, come on.
Or
Log Bloomberg Index, it's been a 10-year nightmare. Continue.
I would look at risk-adjusted returns. And when the risks start to rise or the distribution of outcomes start to increase, I think that's when, if you want to stay in equities because you're looking at the end point and the end goal of the administration might be positive for the U.S. economy, but you're worried about that bridge from now to that point, think about fixed income. You're getting a diversification benefit and income, which you haven't had in 25 years.
Did you see our voice change? Did you see that shade she just gave me?
Exactly. So what do you expect our Federal Reserve to do over the next several months? I guess today's jobs data point will be an important input, but how do you expect them to behave?
Right. So I think the Fed has cut 100 basis points. I give them a lot of credit because the economy was not that weak. There was some risks, and they decided to take the edge off a little bit by cutting 100. I think that reduces pressure on them. What we heard from Chair Powell loud and clear, and we're hearing from different Fed officials is there's a lot of uncertainty, so they do nothing. What that tells me is they're a bit of a sideshow here. I don't think they'll be preemptive. Even if today's report is weak, it's 1 week report. I don't think you'll hear from Chair Powell that they can start to cut. And so they're going to put all of the policy actions.
Right.
And when they get more clarity, I think it's President Bostic said by its late spring. I actually think it might be further out because of the tax issue.
Right.
They're not going to be preemptive, data dependent, reiterate the dual mandate.
2 more questions. It's very important. McKee is invited to the Booth School panel with Feroli. I'm not invited.
Wow.
Good morning, University of Chicago Booth School. When you talk to Michael Feroli, like McKee will, but I won't, how do you fold in his economic call into your confidence in fixed income?
So I think Mike's call has been supportive for fixed income because he has so far looked at the policies and said this is going to reduce some growth, right. But it's still right around a little bit below potential. It's not recession. What I would ask Mike is how is he factoring in the uncertainty shock? Because he's highlighted it, but how do you model that? There are not that many times in history that we can look at these moves and then translate that into business investment, hiring, consumer spending. So that I'm hoping, and I'm sure they will be addressing that today.
Right.
But that's
final question is just really, really important. Citadel has $4.25, the Jean Georges restaurant. A Paula's salad's like $48. What are you putting into your skyscraper on Park Avenue? Is Jamie putting in a sweet green or a chop? Are you going to have a restaurant down at the bottom?
I'm just waiting to get into that building, which hopefully by the middle of this year. And
really, the middle of this, like July?
We've heard August, September as the move-in date. So it's coming up really fast. I sit across the street, and every day you can see the progress. So
we're gonna do a remote broadcast there when they.
Did you pick out the carpet? I mean, is it like lost in translation? They send you the maroon carpet. It's fine.
There's a lot of furniture in there. It'll be good to be all together.
Okay, that's the key thing. Plus, they're working 6 days a week.
Exactly. Yeah. Yep. The remote thing, that's past.
This is wonderful on Jobs Day. Priya Misra with us with great perspective. And, this is what surveillance is about. To have Bob Michael with us and Priya Misra back to back over a number of days is what it's about. I can't say enough, folks, about the uncertainty that Dr. Misra talked about there. I just really can't say. It's just a unique time. We're trying to give you the best conversation we can. Paul, I got to go. I mean, for those of you on radio, you're not noticing it today. I'm dressed up like I'm going to a funeral. Yeah. Sweeney's dressed up like it's Friday.
Like it's Friday. There might be a golf course.
This is not University of Rochester. This is the Fighting Spiders of University of Richmond.
That's right. The Spiders, University of Richmond. Sure.
I looked at their basketball team this year.
Not good.
There's no March Madness.
A little bit down this year.
Did you have an offspring there?
No, that was me.
That was you?
Yeah.
Oh, my word. Yeah. Did you go to the dance? The
ring dance.
The ring dance?
Yes.
Did you go down the stairs?
Yes, absolutely.
It's my word.
Yep.
Priya, this is debauchery of the South.
Yes, it is. Yes.
To all of you across this nation that have survived the ring dance at the University of Richmond, it's Jobs Day. Good morning. Oh, I can't believe what that dress cost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In this Bloomberg Business Flash brought to you by IBKR. Will U.S. CPI exceed 2.4% in March 2025? You can trade your prediction with IBKR Forecast Trader. The yes recently at 60% by yes or no, and earn $1 if you're right. Go to ibkr.com/forecast. We've got futures ticking higher this morning. This is ahead of jobs data and as Federal Reserve officials make their last public remarks before the Fed's next rate decision. We have NASDAQ futures up 0.1%. Same for S&P futures. Dow futures little changed, up about 19 points. We have the 2-year yield 3.95%. That's up down 1 basis point. And the yield on the 10-year 4.26%. That's down 2 basis points. The Bloomberg Dollar Spot Index down 0.2%. And we have Bitcoin falling down more than 1% at just above 88,000. Details of that U.S. Strategic Reserve just disappointed. We have few stocks on the move this morning. Intuitive Machines, it's down 36%. Its second lander, Athena, it had some issues when trying to land on the moon yesterday. And you heard Michael Barr talk about it. SpaceX had a rough day, too. Its 8th test flight for its Starship rocket exploded. Also making news, Goldman Sachs. Sources saying it's pushing managers to relocate to cheaper locations like Dallas, Salt Lake City, and that's...
I thought you meant east of 2nd Avenue.
No.
Continue.
But if they don't, they could risk losing their job. So it's a tough one. It's all part of their cost-cutting initiative. That is your Bloomberg Business Flash. Paul and Tom.
Lisa Mateo, thank you so much. Okay, everybody stop, particularly Global Wall Street, across the nation, on YouTube, around the world. Lydia Basur of EY, Ernst & Whinney, excuse me, EY Parthenon has delivered the goods. She sent me a 23-page deck, which is the single best explanation of tariffs I've seen. You get this from EY Parthenon and Lydia Basur and her team. It is spectacular. Lydia, congratulations. It's brilliantly clear. I'm going to go right to page 18 of your deck, where you say the U.S. is 80% of Canada and Mexico's angst, but we are only 15% of total U.S. imports. What do you say about imports from the rest of the world?
Good morning. When we look at the overall trade linkages between the U.S., Mexico, and Canada in the wake of those 25% tariffs, we can see that Mexico and Canada are very reliant on the U.S. economy and on U.S. trade. When you look at that and you estimate what the impact of these tariffs could be, we can clearly see that when you do some modeling, the impact on Mexico and Canada could be quite significant in terms of growth. We have, about 4% GDP hit to Mexico and Canada in 2026 if these tariffs were to stay in place. And then for the U.S., you have a hit that would be, smaller, given this lower reliance, but still quite significant on the U.S.
I was working off Steve Ratner's great work yesterday, folks, out at Morning Joe with Joe and Mika. And Steve Ratner had a beautiful bottom decile impact of tariffs. You go to the bottom fifth, the quintile, and you come up with pretty much the same number, a negative $1,600. But they still have to pay rent. Is the bottom fifth of America going to be absolutely crushed by these tariffs?
Yeah, there is a disproportionate impact of these tariffs on lower income households, and that's what we see, and that's what we show in this research. And I think it's also important to keep in mind that you still have elevated prices that's having a disproportionate impact on lower income households, and you still have higher interest rates as well. So if you look at the consumer picture today, you already have that bifurcated consumer picture with lower income households under more pressure. So these tariffs will put, additional pressure on the consumer, and then you have, some worries about potential pullback from the consumer and, the overall impact on the economy.
Lydia, what's the stagflation risk in a higher tariff environment where we maybe have higher prices, inflation, but maybe slower growth?
Yeah, that would be a difficult situation to be in, and a situation we don't want to have to face. We're coming off of a period of, a surge in inflation, and we have seen already some move in inflation expectations. So in terms of the inflation impact of these tariffs, the key question is whether this move in inflation expectations that we saw in those consumer survey is going to be sustained. And if that's the case, that would put the Fed in a very difficult situation because, they would have to balance that growth risk with the inflation risk. And if inflation expectations were to be de-anchored, they would be, really worried about that potential wage price spiral, and they would have to focus on the inflation side of the mandate. So there is the risk of a deeper economic downturn in this type of scenario.
I'm looking at the WIRP function, the World Interest Rate Probability function on the Bloomberg terminal. It looks like the market's now pricing in maybe 3 rate cuts this year. How does that seem to you guys?
Yeah, we still have 2 rate cuts in our baseline forecast. There's been a really sharp repricing in market expectations. There's been a lot of concerns about the economy and about where growth is heading. We saw the big, negative print in the Atlanta Fed GDP tracker that has raised a lot of concern about where the economy is heading. If you look at the data and you look at, the underlying momentum, it remains positive. So I think, for now, we're not seeing that pullback in consumers, that pullback in businesses and hiring. But, as we move forward, what we're clearly seeing is that the downside risk is rising. So we still have, about 2% growth for this year, but with clear downside risk and the potential for consumers and businesses to pull back more significantly.
Lydia, what do EY business clients think of your 28-page deck? How are they acting now as they look to Q2?
Yeah, this is really well received in the sense that it's providing a little bit of context and clarity on what the trade situation is, what type of tariffs are in place, what are the trade dynamics that these tariffs are coming into play. And so what we're hearing from businesses is that uncertainty is extremely high. They don't know when these tariffs are going to hit. For the tariffs that are already in place, they don't know for how long they will be in place. That's just creating a lot of uncertainty. And what it means is they're relying on scenarios to try to assess what the economic impact will be and what the business impact would be. And they're also, thinking about building resilience.
Got to run the deck, folks. Get it.
Really
Ernst & Young, EY Parthenon, Lydia Basor, and Greg Dacko there with brilliance. Right now, our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Donald Trump said tariffs on Mexico and Canada could go higher than a 25% rate imposed earlier this week, injecting further uncertainty into trade policies that have rattled markets and left businesses on edge. Trump spoke a day after he paused those tariffs for Mexican and Canadian goods covered by the USMCA trade agreement until April 2nd. He talked about the pause in an interview that aired this morning on Fox.
Because I wanted to help Mexico and Canada to a certain extent. We're a big country, and they do a lot of their business with us. April 2nd, it becomes all reciprocal. What they charge us, we charge them. It's a big deal.
Asked during the interview if businesses would receive more clarity on his trade strategy, Trump responded, "I think so," and added the tariffs could go up as time goes by. For the second time in 2 months, debris from a SpaceX vehicle rained down in the Atlantic from an explosion after launch. This time, the Starship lost contact minutes into the test flight as the craft came tumbling down. The rocket blasted off from Texas last night. The booster came back down to Earth successfully, but as flight commentator Dan Hewitt described, engines on the spacecraft started shutting down as it streaked east.
And we just saw some engines go out. It looks like we are losing attitude control of the ship.
Contact was lost with the spacecraft as it went into an out-of-control spin. No astronauts were on board the craft. Finally, people in France are saying you found a what by the what? High-speed trains from Paris to London, Brussels, Germany, and the Netherlands are all canceled this morning after rail construction workers discovered an unexploded World War II bomb near the tracks. Global news 24 hours a day, whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. The Secretary of Treasury over on the Death Star with Andrew Ross, Sorkin, Becky, and Joe. And this headline, I don't even know how to process it. And the futures disappeared here. We were up, what, Paul, 15, now we're up 3. Secretary of Treasury, President Trump is confident Xi of China won't move on Taiwan during term.
That's good news.
I believe I've never seen that in my life.
I'm not sure what a Secretary of Treasury should be commenting on, geopolitical issues, but maybe that's how they roll over there. I don't know.
All we're going to do, folks, is try to bring you the zeitgeist with our leadership from Michael Barr to bring you the news and aggregate it across all sources. That's the best we can do, and we're dedicated to that. The actual Bloomberg headline, Trump confident Xi won't move on Taiwan during term. I don't have any comment on that. Futures up 4.
Now a look at the front pages. What's making news around the world? Your daily roundup of today's headlines on Bloomberg Surveillance with Tom Keene, Paul Sweeney, and Lisa Mateo.
Good morning, everyone. Paul Sweeney and Tom Keene on Friday. Jobs Day here, really coming up on it rather quickly here in 30-some minutes as well. But we got to do the papers, and that means Lisa Mateo. Have you recovered from Costco?
I did. I'm good now. It was very sad news, but shares are still lower, down about 2%. This morning, you guys are always talking college basketball, right? So wanted to kind of bring it in here, get myself involved in the action. This is from the Post. Okay, so they're saying that March Madness is just that. It's March. They're saying that's failed to kind of bring this buzz to the regular season. They list a couple reasons why. They talk about, they're competing with football, women's college hoops getting more popular because the women actually stay in the sport longer, so people get more familiar with them. Well, there's the guys, they move on to the NBA. Coaches coming, going, the transfer portal, NIL. They say that, they've tried to expand the March Madness tournament to spark it. Did that do it for you, expanding the tournament? Did that spark excitement? No?
I mean, it's a little bit better. Just get some more teams in there. But you're right. There's more and more. I think, just speaking from the perspective of Duke, all my guys are one and done. And so our connection with our team, and I speak from a lot of alumni, is much, much less. Now, can you extrapolate that out to the entire college game? I don't know. But
so this weekend, it's a huge game. Let's say there's 25 gifted players playing. Are there any seniors?
On the Duke team, none to speak of. So
there's no seniors.
No,
with Jess
North Carolina will have some.
A&M had a seniors day in
that. But again, the transfer portal, for better or worse, it gives the kids freedom to go where they think they can have the most success. So that's great for them, and they deserve that. Now, the downside is, there's no stability within teams and programs, and therefore,
loyalty.
David from Washington emails in and says, how much do you think, who's the guy for Duke, the young freshman, Connor?
Oh, Cooper Flag.
Cooper. How much is Cooper piling in name, image, and likeness?
Oh, $6, $7, $8 million this year, probably.
As a freshman?
Yes.
God, that's Lisa Mateo money.
So
next.
Oh, my God. Okay, so the egg shortage drama continuing, prices higher, stores limiting purchases. So now the U.S. is on this global egg hunt. So they have a goal. Here it is. They need up to 100 million eggs within the next month or two. So they're going out, they're countries like Poland, France, Indonesia, to ask about eggs. The problem, like we've talked about, the shelf life isn't that great. Eggs still, they break in transit, and there's flu outbreaks in other countries too.
But I sent Lisa, I sent Alex, I sent Carol Master. I was in the shop right yesterday in Jersey. Plenty of eggs.
But they're a little pricey.
Probably a little pricey. I didn't check the prices. You were right. But they were there.
They're there.
So
did they have the signs like limiting purchase?
No.
I opened the old GE. We got the little old GE made in 1950. The engine makes a lot of noise. And there's my $12.99 eggs staring me in the face.
Still, you only got 5 weeks. You got to eat those, okay?
Give me one more.
Bad. The last one. People are, as the kids say, throwing shade at Meghan Markle. Meghan Sussex. Okay, there you want to put it. Her new Netflix show, With Love, Meghan. She cooks, right? She tends to her beehive, she picks berries, but it was this pasta dish that she called single skillet spaghetti that threw people over the edge. Okay, so what she does is that It's an all-in-one dish. She lays the pasta out like raw in the pot, and then she throws the tomatoes, the garlic, and the olive oil, and then she pours the boiling water on top of it.
Really?
So she lets everything kind of cook at once instead of boiling separate.
Is it work?
And so everyone's up in an uproar. They don't like it.
Well,
they say you can't do that.
Didn't Martha do that about 1983?
Well, I didn't get past the second line, which says Megan Sussex.
Yes.
That's her British royal name.
Sussex.
She goes by. I didn't know that was a thing. I've never seen
that
it
is her
before.
thing now. You have to keep up with the pace.
Oh, I could. There's so many things I could say where Mr. Bloomberg would call me up and Tom, put the surveillance cork in it.
But the reason she says it gives it a creamy texture because it keeps the starch in it. So that's why she does it that way. And it's less pots to wash.
Lisa Mateo, thank you so much. Greatly appreciate it. The newspapers with Lisa Mateo. Lisa and I have a belated shout out here. It is that time of year. We go to Jobs Day here in 30 minutes with futures up 6. They've retrenched a little bit. We need to say a shout out to the Penrod family of Fort Lauderdale. And it's that time of year at the Elbow Room.
Oh, yeah.
Talk about a remote we need.
Oof.
We could go down to the Elbow Room in Fort Lauderdale.
They would be like, Mr. Sweeney, we've missed you.
There's lots of people down there doing name, image, and likeness. We say good morning. Stay with us across the nation on your commute and on YouTube as well. Dolly.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What's the immediate take of a tariff war?
For the longest time, technology has been the driver of this market.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Trump declared a national emergency at the U.S. border with Mexico.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Just after a successful newspaper segment, she's looking at Costco. It's cratered. How far down is it? 2, 3, 4%?
2%, yeah.
Costco. Okay, 2%. Cratered. Anyways, we say good morning. It's Jobs Day. We got a wonderful lineup coming up on the economics of the nation, given the historic turmoil that we're in right now. Whatever your politics, to have Claudia Sahm and Ellen Zenter with us at 8:30 is a good thing. Rebecca Patterson scheduled to be with us as well. We start strong without all of this talk. Links into the equity market, into your weekend, over the kitchen table. Dear, what do we do now? Cam Dawson will be with us here in a moment. Futures pull back. Futures up 5, Dow futures up 7, VIX out over 25 as well. Let's get right to it from the Interactive Broker Studios, the Bloomberg Business Flash. Lisa.
Yeah, and we've got TGIF taking on a whole new meeting after a rough week we've had here in Wall Street. Conflicting signals over trade tariffs, right? Geopolitical uncertainty, all of that. Today, though, the focus does shift to U.S. jobs report. That's coming up about a half hour from now. So we'll start with NASDAQ futures up about 0.1%. Dow futures, S&P futures, they are little changed. We have the 2-year yield 3.94%, down 1 basis point. The yield on the 10-year 4.25%. And that's down 2 basis points. To currencies, we have the Bloomberg Dollar Spot Index down about 0.1%. The euro up 0.6% at 108.54 against the dollar. Some good news, bad news on the tech front. So the good news is that chip stocks are starting to rebound. We have Broadcom up 10% after its AI growth fueled that upbeat forecast. You have Nvidia up nearly 1%. ASML, their ADR's up nearly 2%. But the bad news, you have that downbeat forecast from Hewlett Packard Enterprise, and that has shares down about 18%. Also, we're checking in with Tesla shares because they're down nearly 2% after dropping more than 5.5% yesterday. That is your Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Kim Dawson with us with the New Edge Wealth for a really important conversation. Many would say arguably more important than all the jobs wonderment we're going to do here in 28 minutes. I just picked up a random ETF, unleveraged, MAG 7, and it's 5% down. Is that a correction in all these stocks we're wedded to?
Well, we've certainly seen, if you look at the MAG 7 cohort, we're down nearly 17% from that December high, which we thought was unsustainable. You had seen these stocks rally 10, 20% over the course of 1 month, really on no fundamentals. So we're reversing some of that. And I think that we're now at a very critical juncture for the Mag 7 as well as the broader market, you're at the 200-day moving average. This has been a powerful uptrend. Does it hold?
And Paul, 2.6 standard deviations on that Mag 7. We're done. I got to admit, the chart's a little disturbing.
Right.
Like, you know, Cam and I doing logarithms. It's a little disturbing, to say the least.
So just from the structural perspective of the market, Cam, I mean, the S&P 500, I'm looking at my relative strength index, is kind of sitting right on that 200-day moving average. It's blown through the 50-day already. How important is that as a support level? And if we go through that materially, does that suggest we could have a deeper correction?
So we do think that that 200-day moving average is absolutely critical. What we typically see is that if you break below it, you do see more volatility to the downside. Here's the caveat, though. Once you break below that 200-day moving average, your forward returns looking out over the long run, looking into 3 years, start to look very attractive because you've been in a corrective period.
Am I wrong? That is the oldest guy on the planet, or at least within the zip code? We're nowhere near a correction.
No.
When was the 10%, folks, used to be normal? Am I right? Or is this a new world we're in?
Volatility is a feature of being an equity investor. We've just been in this very placid environment where we haven't had much volatility whatsoever, and that we keep having V-shaped recoveries. So our view coming out of our view coming out of this period of volatility is that we are unlikely to see a direct V-shape, meaning that we think we could get a rally off of these oversold levels, but that we could roll over at resistance and stay in this volatile period and potentially even go below the 200-day moving average. But we, again, would see that volatility as an opportunity if you're underweight equities to buy into some of that weakness.
One of the things that we talked about coming into 2025 was the importance of earnings coming through, because it doesn't look like the Fed's going to do a whole lot for us, maybe 2 rate cuts this year. What is the earnings outlook from your perspective?
Well, it continues to get trimmed lower and lower, and we've been cutting earnings estimates on a consensus basis for the last 5 months. And it is one of the reasons why we think we are seeing this volatility. You have been cutting earnings estimates, but stocks were going up on multiple expansion alone. So part of this is just that recalibration that we got to very expensive valuations because you were cutting earnings estimates. Now, we are seeing signs that earnings are coming through, of course, in the fourth quarter. But the question is, as we roll into the month of April and we get all this uncertainty around tariffs and people kind of sitting on their hands in front of them, do we see that weigh on the outlook for the rest of the year?
One of the groups that people have been talking about might do well or is doing well are financials. What's your view on that sector of the market?
Well, we're starting to see the banks roll over a little bit, and watch the asset managers. This is interesting.
Is BlackRock an asset manager?
Blackstone, Ares, Apollo, more of the private equity managers, because those names have been trading notably weak. And the question is the market picking up on weakness in their underlying portfolio companies?
I mean, she's such a geek. She sits up in the food court on the fancy blue. It's like Chrysler years ago. It's Corinthian leather. She sits up on the blue seat. Tom Secunda sits down next to her. She got a 400-page deck. Where's like the amount we're down NASDAQ versus the median stock down NASDAQ? Do you have an update on that?
I don't off the top of my head, which means you might not call me a geek anymore, which is sad. But what we would say is that the equal weight S&P 500 has pulled back less than what we've seen in the NASDAQ. The correction has not been as deep because it did not have as far to fall. This is why valuations do eventually matter.
How about on the fixed income side here? Where's the opportunity? A lot of folks feel comfortable kind of in that 3 to 5 years, just staying in the treasury market, getting decent coupon. Do you stay there, or do you try to take some credit risk?
Well, credit spreads remain very contained, and I think that's actually a good message for the equity markets. If credit spreads were blowing out significantly, we'd be far more concerned about a big downside to growth estimates. The high yield credit spread is still under 300 basis points. It is still near multi-decade lows. This is not a high yield market that's saying that we are falling off a cliff.
On this job site, 25 minutes away with Claudia Sahm, Ellen Zenter, Rebecca Patterson with us right now. Cam Dawson on the equity markets here. Futures up 6. Good morning on your commute across the nation. On YouTube, subscribe to Bloomberg Bloomberg podcast, humbled at that growth over the last 10 days. Paul?
So, Cameron, what do you tell your clients these days when they're like, probably the rest of us, just trying to drink all this news in like we're drinking out of a fire hose here? There's so much news coming out on a daily basis. Yes, we've been here before. We've seen this before, but still, it's tough for investors to kind of get a sense of where to go. How do I stick to my knitting here? What do you talk to clients about?
The key message is that volatility is normal and that we haven't been in a period of higher volatility, but this is something that we deal with as equity investors. The next message is that even if it's not the ultimate low, buying after a correction still gives you higher forward returns. So what we've been talking about with investors is that, yes, you can buy into weakness if you're underweight. You might see a rally up higher. You might roll over further from there, right, but continuously see volatility as opportunity.
What are people, come on, what are people doing right now? Are they saying load the boat on a Friday with all this cacophony out of the White House, whatever your politics is, or is everybody scared? So what are you seeing at New Edge?
Well, there certainly is a bit of arrested development where, because there's so much uncertainty and flip-flop with the policies coming out of DC, that certainly people are worried about a much larger downside scenario. But what we continue to step back is just take the view of saying, if we're not seeing credit spreads widen out, weakness is buyable.
Okay, we got breaking news here. We're thrilled to have Catherine Greifeld with us. First of all, is Gus like in the spring?
You know, he loves it. The problem is, though, that the horses haven't fully shed out yet, and it's too early to clip them, so...
Little hot.
It's a little hot, you know.
How much is the shoeing cost?
You know, that's a great question. Gus is on an unusual schedule because he gets it done 4 times every 4 weeks as opposed to every 6 weeks, but... I won't divulge on air, but...
You won't divulge on air, but there's like zeros after it.
It's an expensive manicure.
Cam Dawson and Catherine Greifeld with us, and this is a headline that just came out. Catherine Doherty, thanks for this. NASDAQ joins exchanges seeking to ruin Cam Dawson and Katie Greifeld and Paul Sweeney and Tom Keene's day. Cam Dawson, do we need round-the-clock trading?
No. I want to sleep. Please.
Catherine Greifeld, do we need round-the-clock trading?
You know who's probably happy is the exchanges, because they're going to make more money if they can offer trading all the time.
Are we going to, is it like BitDog? Are we going to trade? Am I going to be up at 2 p.m.?
You could become a pajama trader, you know, and just always be on.
Cam, do we need round-the-clock trading? Or is it trading away someone's wealth?
I think it raises questions about liquidity in the other hours, and do we see unnecessary increases in volatility in times when liquidity is tight overnight?
See how difference here? You and I are polite with each other. When Greifeld wants to jump in, she gets her elbow out. Go.
Well, you know, one thing I do, you mentioned that, and something I wonder about is that you have this cluster of volume around the open and the close, obviously. If we're around the clock, does that change, or do we still cluster at these same times? I don't know.
Yeah, do we see that smile of volume still persist? And we see also at the same time as a lot of the gains happen overnight. If you look at the trading gains over the long run, the gains in S&P 500 come from overnight sessions. So how does that change in 24-hour trading?
Is Bitcoin causing this? You're the Bitcoin expert. Is this Bitcoin's fault?
I'm not going to go that far, but I do think it's interesting that it feels like traditional equity markets have been taking pages from crypto markets to an extent, and I think that 24-hour trading is one of those pages.
So, Katie, how much in the crypto market? Because I'll come in the morning and I thought Bitcoin was at 88 and it comes in to 82. Does it really trade overnight a lot?
It does, but not a lot. We call them, I mean, the joke is that those are goblin hours. You know, who knows what happens overnight in the crypto market?
Oh, I get it.
And then you come in and, you know, everything reverses. I thought it was telling that you had this big crypto rally over the weekend. Prices of Bitcoin popped. Then Bitcoin was down on Monday, but the equities that only trade on U.S. exchanges had to catch up. So there was some really funky trading.
Since you're here, and Cam Dawson, Paul Sweeney, and Tom Keene have zero knowledge, give us a value add. Is it a strategic reserve? Are we going to store BitDog and salt mines in Louisiana?
You know, I wish I had the answer to that. I will say today's the White House Crypto Summit, right? So maybe we'll get some clarity there.
Do we have any notables?
I believe Trump is going to make statements.
Okay. All right.
And Bloomberg Technology has the Crypto Czar on at 11 a.m., David Sachs. So,
very good. We're going to carry that live.
And Jerome Powell with us here later in the afternoon, I believe, from the Booth Conference. I wasn't invited to.
I heard that.
I don't know if he'll be talking about crypto.
So 24-hour trading. Folks, I'd love to know what you think. Out on YouTube live chat, email me, send semaphore, smoke signals, whatever. Cameron, help me here.
I don't have much to help you.
Dumb. There's something about you close and there's after hour for 15 minutes or whatever.
Right.
And then you just do something else.
You go do something else, exactly.
You write or you think or you go ride Gus.
Yeah, yeah. I mean, I do think as a journalist, someone who covers financial news, I shouldn't complain. There will be a lot of things to talk about and more time to talk about those things, but I think we should keep something sacred. Do we need 24-hour trading?
No, thank you.
Yeah, come on.
Your excuse. Katie Greifeld, thank you so much. Getting ready for a 9 o'clock effort. She'll be looking at the jobs report, and of course, Kevin Hassett on Katie Greifeld's show this morning. Katie, thank you so much for that. I just don't, it's like Bitcoin and retirement plans. I got my opinion. Nobody cares. But 24/7, do I need to be breathless at 6:30 p.m.? I need to buy Apple.
Yeah, I think with the technology, there's an argument that maybe you could do that. You should do that. So, Cameron, all right, our world is 8:30. 16 minutes from now, we're going to get the jobs report. What are you going to be looking for there in the jobs report?
Well, certainly we don't think we're going to be getting signs yet of the DOGE cuts to jobs. So it means that there's likely going to still be a lot of volatility within this jobs data with seasonality questions. There's a huge Mack truck size gap between the high and the low estimates, which just tells you that the street doesn't know what to expect. And so it is really an expect the unexpected when it comes to this jobs data. If it comes in hot, we do expect bond market volatility to come back, meaning upward pressure on yields.
What if it's under 100,000? Anna Wong's got some gloom number.
Yeah, that runaway narrative that the U.S. economy is weaker than expected, and that would cause things like economic surprises to turn lower. And the question is, do you start seeing GDP forecast cuts?
We'll have to see. Kim Dawson, thank you so much. Greatly appreciated today. Really appreciate it. Kim Dawson's with New Edge Wealth this morning. Paul Sweeney and Tom Keene getting a jobs day. Talk to Claudia Sahm here will be interesting to say the least. And I don't hear recession calls a la her iconic research, but global from Amanda Agati this morning, the assumption of growth slowdown is tangible.
It is. And maybe just look at the whisper number here, Tom, for the jobs. Again, the survey number is 160,000. The whisper number is 125,000. I can't remember the last time we saw the whisper number that much below or even below the survey number.
13 minutes to the jobs data. We'll go beneath the headline numbers on the two reports and give you, of course, the market reaction. The Sweeney yield's important. Wow, in 2 basis points, 3.94% on the 2-year yield. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Trump says tariffs on Canada and Mexico could go higher than 25%. He spoke in an interview on Fox Business after putting tariffs on trade compliant goods, on hold until April 2nd. Bloomberg government's Maeve Sheehy says the president also discussed why he's pausing those tariffs.
Part of it was to help Canada and Mexico, but he's also said that Canada and Mexico are working much harder lately on curbing fentanyl and illegal immigration, which are 2 of the reasons why he wants to put these tariffs on in the first place.
Bloomberg government's Maeve Sheehy. The GOP-led House has voted to censure Texas Democrat Al Green 224 to 198 after he disrupted President Trump's address to Congress Tuesday evening. All Republicans voted in favor and were joined by 10 Democrats. Speaker Mike Johnson.
We take no pleasure in this. I gave repeated warnings to Representative Green to stand down and to sit down, and he refused to do it. He chose to deliberately violate House rules in a manner that we think is probably unprecedented in history, interrupting the message of a president of the United States who is an honored guest.
Green is the 5th member of Congress to be censured this decade. It is that time of the year again when the clocks spring ahead and we will lose an hour of sleep.
Killing me.
I'm sorry, man. I know. Clocks move forward this Sunday for daylight saving time. Research has shown that the ritual of changing the clocks in spring and fall can impact productivity and our mental and physical health. It's why the American Academy of Sleep Medicine wants to eliminate seasonal time changes. Dr. Anita Selekar is the president of the Academy.
It's harder to go to bed when it's light out, so that can make it harder to fall asleep, but yet our responsibilities are the same in terms of waking up for school, waking up for work.
Dr. Selekar recommends moving to year-round permanent standard time. Global news, 24 hours a day, and whenever you want it, with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom Polis.
I thought this was Paul Sweeney when it came in. This is John emailing in, nails it. Tom, we don't need 24-hour trading. All we need are the last 10 minutes. That's where all the volume is.
That's
Don't
right.
tell my bosses.
Right. First 10 minutes and the last 10 minutes. That's right.
And that's what Cam Dawson was alluding to there. You know, does that reality disappear for us? Okay, it's none too early. I know, pause into March Madness. Michael Barr, it's un-American. There's 3 opening days. We got Tokyo Dome, Cubs, Dodgers. Then we got every other team but I think 2 teams on the 25th-ish. Tigers at Dodgers. Yeah. They start strong. That's actually good baseball.
That's going to be
early
good.
In the season. And then 2 other teams tag along afterwards. Remember, it used to be April 10th. The president would go to Cincinnati, throw out the ball. Why can't President Trump do that? But they've blown it up with all this TV greed.
Yeah, and now we start, it's going to be cold in most of these stadiums.
Even when back in the day when opening day was like April 7th or whatever you want to call it, 10. And I'm covering stuff at the old Tiger Stadium, it was snowing. They had to cancel games because of that. So the old Michigan Trumble.
How good was Jack Morris? Let's just cut to the chase.
How cool. Listen, the 84 Tigers team was one of the best ever.
Ever.
Yeah.
Like 27 Yankees.
And it's sad, I was there. That's how old I am. So I covered that.
And we'll have to see. Opening dates out there. But March Madness is before, right?
Yeah, so we're going to have the end of the regular season this weekend, conference tournaments
it's
next
exciting.
weekend.
Duke is like really in it.
Oh, yeah.
You know,
yeah, they're in it to win it this year.
Exciting. We'll have to see. It is Jobs Day. We're 9 minutes away. We've got wonderful conversation, and truly, folks, thank you for the many emails. These tumultuous times, just absolutely amazing what we're living at right now. Eric and our interns have done just a great job bringing in great conversation, and we'll continue to try to do that into next week, into the end of the first quarter. Futures up 3. It's Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. All right, we are about 5 minutes away from jobs data. Economists, they do expect that they added about 160,000 jobs in February in the U.S., so ahead of it. Right now, NASDAQ futures up 0.1%. Little movement in S&P futures and and Dow futures. We have the 2-year yield, 3.93%, down 2 basis points. And the yield on the 10-year, 4.24%. That's down 3 basis points. We have the Bloomberg Dollar Spot Index. That's down about 0.2%. And shares of Walgreens are up 6%. It agreed to be purchased by Sycamore Partners for $10 billion, and that's taking the company private. Shares of Gap higher, 16%. That's after strong sales across its namesake brand, but also across Old Navy and Banana Republic. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. Wherever you get your podcasts, I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and Tom.
Lisa, thanks so much. Campmany, Patterson, Zenter will be with us, but right now Claudia Sahm joins us, chief economist at New Century Advisors, her PhD at Michigan, with the giant of inflation analysis, Matthew D. Shapiro. Claudia, I got to get this out of the way before we go to jobs. You are a claim for the Sahm rule. There seems to be a bet of slowing GDP. Are you in any way on a recession, not an NBER recession, but are you with the Sahm rule in any way looking at a new analysis of slowdown?
So absolutely looking at the labor market, any signs of slowdown. We are not at a place where we're close to kind of that historical trigger for the Sahm rule. I mean, we would need to, see the unemployment rate probably rise this year up to 4.5% before we start to get kind of in that danger zone. But of course, there are certain, sectors looking at something like the government sector, we could see a contraction there, and it doesn't necessarily have to show up as a national contraction. So there's a lot to watch in the labor market in terms of things slowing down.
So Ben Bernanke would call the chart a hockey stick. We got a hockey stick in government employment. When you were at the Fed years ago, probably you'd be canned by right now. But Claudia, can government job dynamics move the unemployment rate or start the vector 4, 4.1, 4.2, 4.3?
So anything's possible, but we have to keep the scale in mind. The government sector is less, the civilian federal workforce is less than 2% of total workforce. Even if you take into account federal contractors and people that are on federal grants, that also, those cuts are in the, in the eyes of DOGE as well. Like you're still talking about, 8% of the employment. So the scale is not there, right? We'd have to have really, really big cuts in employment. But the thing is that one thing that's happening with DOGE is very worrisome is the fact that they are moving so quickly and are doing it with such great uncertainty that it like amplifies those effects. Like right now, anyone who's a federal government worker should be concerned that they might lose their job. In the end, they probably won't, but that can affect their behavior right now. And if we have them pulling back on spending, like government workers are not siloed off in their own little part of the economy. Like they spend, they buy things, right? Like, so like, I think this is where DOGE is really amping up the risk and what I think is kind of an irresponsible, like to move fast and break things, like you really could break things. And so that's a wild card. It's very unusual. Like trying to, reduce government workforce, this has been done before. President Trump is not the first president to have that as part of their agenda. But this like speed and the uncertainty, the chaos piece of it, that is unusual.
Right. Paul, get one more in here before the report.
Thank you. Claudia, talk to us about the Challenger report. Most people didn't even know about that report, but boy, that came in and surprised a lot of people. What did that tell you?
Right. So the Challenger report can be a really good gauge of kind of the direction. And we absolutely should be on high alert for any sign that layoffs are taking off. We've been for many months, if not the past few years, in an environment where the hiring rate has been somewhat low relative to like how good the labor market is. It's low employment, and layoffs have been very low. So that's kind of been holding it together. Hiring hasn't been great, but layoffs have been low. So if you go then and start having layoffs really pick up, then we could have a big problem and have them, unemployed really start to pile up. So I think it's a red flag. The report tends to be pretty good at like directions. Yeah, layoffs are rising. It's maybe a little less good about the precision, right? Like it's, a lot of the data we have, they're kind of noisy. So I don't take it. I don't expect to necessarily see that show up in the official statistics, but it is something that, not a good number.
Claudia Sahm with us. We should note that Anna Wong of Bloomberg Economics with a reduced number. Carl Weinberg of High Frequency Economics as well. Dr. Sahm will continue with us, and then Ellen Zentner, Rebecca Patterson, Kristina Campmany with us as well. What do I do here, Paul? I look at the Sweeney yield, 3.93.
Okay.
And the 10-year real yield is in 2 basis points, 1.91. Wow. What do you look at on the screen?
Yeah.
Besides Duke basketball, what are you looking at?
Exactly right. I mean, those yields you called out, Tom, very interesting. But the markets, equity futures, just waiting here because not much movement there, Tom.
And the consensus statistic on non-farm payrolls, 160,000. Here's Lisa Mateo.
This is breaking news from Bloomberg.
And Claudia Sahm said she'd be looking for any signs of a slowdown in the data. Let's get right to it. You said it, the survey, 160,000. Coming in later, 151,000. The last revised was 143, revised down to 125,000. That was the prior. Then we move on to the unemployment rate. The expectation, 4%, came in a tick higher, 4.1%. Then we want to check out to average hourly earnings. We'll go year over year. 4.1% was the expectation, came in a little bit lighter at 4%. Now for the reaction on Wall Street, we go to NASDAQ futures up 0.5% now. S&P futures up 0.4%. Dow futures up 0.2%. So a little bit of lift to the markets. As far as the yield space, 3.95%. That's the two-year yield. That's down about 1 basis point. The yield on the 10-year, 4.26%. That's down about 1 basis point. Tom.
Lisa, thanks so much. I had the HP12C out, Paul.
You did?
I was doing a 2-month moving average to impress Claudia Sahm. Claudia, with revision, I got 2 months, and we'll get much more later, of 138,000 60-day run rate. Is that a buoyant job economy?
I'm not sure I'd use the word buoyant, but these numbers at a first look are, they're solid. They're showing the difference between 150,000 and 160,000 on the month is not let's be real about the statistical precision of what we're doing here. But it's not, it's kind of at trend. We're treading water. The unemployment rate ticked up a tenth, but again, also staying very low. So I think this report we should see a lot as a baseline before we're headed into what has been a very chaotic period with tariffs and with the DOGE action. So, the better this was today, that's more resilience. So it's great. It's not great, but it's good.
Well, I got a futures lifted on it, Paul.
Yeah.
Can we describe how unfair it is to Claudia Sahm and Helen Zenter to warble gaily here with the data coming out? The Greenspan statistic, Paul, the underemployment rate from 7.5% last month out to 8% this month.
Yep.
So that's just one tea leaf within the bucket of the ship of tea.
Yeah, a little bit, again, on some of these revisions coming in lower from last month as well. I'm going to put that in context as well. Claudia, how do you think the Federal Reserve will look at this data print here today?
I think so I don't see anything here that will change their near-term course. So they're not set up to be cutting interest rates. I don't, this doesn't, a really negative print might have, a really weak print might have kind of push some of, the growth issues might come up more quickly. I think this still puts them on, this puts them in their wait and see. This is not that far off of expectations. Right. This is a sustainable number.
And we see it within the market with 10-year real yield lifting up, futures come up a bit. VIX is better behaved. Yep. Claudia Sahm, thank you so much. Please call us if the Sahm rule clicks in here anytime. 24/7 we'll take that call. Claudia Sahm with New Century Advisors. With us in the studio right now, we are honored to have one of the best students of the American consumer in American economics. Ellen Zenter joins from Morgan Stanley. Let me go to the wheelhouse, Ellen, before we get to the jobs day. Mm-hmm. With the absolute historic moment, including inflation, sea change in Japan, the Europe of yesterday. I can't imagine Morgan Stanley economics in the last 24 hours. Is there a resilience to the American consumer?
There's a resilience depending on what income group you're in. And the thing that I'm concerned about is that we've had all our eggs in one basket for some time now with the wealthy propping up aggregate spending in the U.S. And with tariffs coming on goods, it's going to disproportionately hit lower income groups, create that continued drag on them. The wealthy groups probably won't be there to pick up the slack in good spending. We're spending on services, right? And services aren't where tariffs are hitting.
So in 2025, I know one of the themes, and you guys think about the big themes out there that could be moving the market, and we did not see it necessarily in this jobs data, but if you're going to have tariffs, potentially a negative impact on growth, economic growth, maybe a impact on inflation moving higher. Changes in immigration also maybe having some inflationary and some growth issues. When do you think we'll start to see that in the data? Is that a second half of 25 issue?
Yes, I think depending on, which I don't know what's going to happen from day to day, hour to hour, minute to minute. Exactly. But depending on when tariffs are put in place, and we know already they're coming through from China. The reason why the Fed has to remain data dependent is because tariffs fall here, there, and everywhere. And you don't know how much of it is going to be absorbed by manufacturers along intermediate goods route or to final goods for consumers. And so you just have to wait to see what happens. I suspect that households in the U.S. are not indiscriminate buyers here, that we do have a degree of price tolerance, and that you are going to get a hit to aggregate demand. And as a policymaker, you should look through that, the price effects, because eventually they're going to come off because demand is going to be lower. So for the Fed, the big question now, and I guess for all of us in the economics community, is that terrible word stagflation.
Yep.
Does the inflation come before the stag or the stag before the inflation?
Your claim, away from the 3 zip code focus of this show, Manhattan, Wall Street, all you have to deal with, frankly, at Morgan Stanley, is the charm of Austin, Texas, entrepreneurial Texas, and your work at Colorado, Denver. I mean, you're not from here. Can the rest of America withstand this tariff discussion? Do you look at America as one whole within the cacophony now, or are we separate, resilient, and discrete from the political fire and heat?
No, I think that tariffs are something that hit very broadly. Now, obviously, you've got states that are going to be much more heavy importers for intermediate goods. And so I'm thinking of my state like Texas is more exposed there than, say, New York. But it will impact businesses of all sizes everywhere, and especially small and medium businesses cannot absorb the cost increase as much as large multinationals. Look at the New York Fed survey that came out earlier this week and noted that businesses in its region across services and manufacturing were expecting cost increases. And then you read the comments within the survey from that survey and the ISM manufacturing survey, and there's complete uncertainty about the supply chain impacts and where and how do you absorb those costs. And it's uncertainty itself.
Yep, that's right.
They can start dragging down the economy before tariffs actually hit.
So given that background, would our Federal Reserve say, let's do a preemptive cut?
No.
No, okay.
Absolutely not.
So they're going to wait to see the hard data.
Yeah, and the data's not rolling over. Look at the payroll report today. It's not rolling over. And so what you need to gain consensus on the Fed to move is something obvious, so that these two sides, that those that would want to maybe do preemptive or think that rates are a little more restrictive than they should be versus those that think we're hanging out here in a perfectly fine level, something has to slap them across the face and say, oh my God, we need to move. And something like today's payroll report or what we're expecting on inflation prints is not going to do that.
In honor of Booth School Chicago, there's a wonderful seminar today. Jerome Powell with comments for Bloomberg. We'll have that sometime after 12 noon. This is the panel I was not invited to. Are you going?
I'm going.
You're going. I'm not. Lisa, are you going? Everyone else is going.
I guess I got to join the party.
I'm getting a free ride there from Bloomberg. Your car is taking me there after. Yeah.
That used to be Tom's
That's how I roll on Fridays.
McKee is going. I'm not going. Did you notice that, Michael Ferroli? Thank you so much. Ellen Zentner, Frank Knight, 1921. We all had to read it. They put a gun to our head and said, read this or you can't move
not
forward.
many of us read it in real time, Tom. Tell me, what was that like?
It was
when
really
came out?
like your wise ass. Okay, 1921, Frank Knight. I want you to describe Knightian uncertainty to our audience worldwide right now. It's not like risk. It's not like Las Vegas, is it?
No, it's very, it can be very pervasive if it's sustained. Now, in the 20s, and on through, say, the 70s, right? Uncertainty would be reflected in sentiment, But and it told you exactly what businesses and households were going to do. And I'm talking specifically about University of Michigan, the rise of the sentiment surveys in the 1950s onward. Today, uncertainty impacts sentiment, but it doesn't necessarily tell you what you're going to do, right? My husband will tell you that I shop when I feel great. I shop when I feel like hell. Okay, but if it is sustained at high levels, it will start to permeate business investment decisions, household spending decisions when people can't plan. And I'm looking at the Trade Policy Uncertainty Index, which has gone through the roof, and it has surpassed the previous record set in August of 2019. And that is what you're seeing in these surveys. And businesses are saying, I can't do this.
So we got to use the surveillance sentiment indicator. Are you going to be at Fendi Friday afternoon?
No, I'm probably tapped out on goods spending. I've also been warned by my husband that I went a little too far late last year. So I would short luxury retail stocks because Zenter has closed her wallet.
Well, and JPMorgan actually out of the report saying enough on luxury right now. We'll see how that works out over the last number of months. Let's get back to Jobs Day one more. You're going to write about this, Seth Carpenter team, you and thematic investing. What's your message pre your written report on this jobs report? I believe you just said, you know what, it's resilient.
So today it's still showing resilient numbers. Now, there are a lot of folks that came in this report and said this report doesn't matter because federal layoffs have only just begun and it's going to really be reflected in the next report. So you are going to get deeper cuts to federal in the next report. We saw a drop in participation and still the unemployment rate went up. That's an interesting combination, probably reverse next month. I'm looking for big outflows from labor supply because of immigration. We have not seen that switch yet, even though for 6 months we've seen a really big drop in flows.
You want to stay? This is going to be a clinic. Rebecca Patterson's going to join us right now with the Council on Foreign Relations. Ellen, if you want to stay, please do. If you have to go to the Booth School panel, which I was not invited to, please leave.
I've got to get my free
car.
breakfast. If not from Bloomberg, then from Chicago Booth.
Okay, well, the Sweeney
it's free
breakfast
this morning.
The Eggs Benedict is upstairs.
Guys.
It's great. Joining us now, Rebecca Patterson, after Ellen Zenter as well. Rebecca, I got to go to currency market as litmus paper, the system. Do we have a new dollar entrenched given this political chaos?
I think for the short term we do. The question to me is, does it continue? I think the dollar is down against most peers this year because of worries about growth, and we're seeing that reflected in interest rate expectations for Fed funds. So now 3 cuts this year. So the yields coming down and Fed funds coming down, Fed fund expectations coming down is bringing down the dollar. But the other part of this, Tom, that we're seeing, I believe, is repatriation. The last 10 years, foreign investors thought the U.S. was the only game in town. A lot of capital came here. They helped prop up our stock market. They're taking their toys home. So they sell the dollar and they sell the stocks, and then they put it back in their home markets, whether that's Japan, Europe, et cetera.
I had lunch yesterday. I had the number 3 value meal. It's really, it's really good with the fries. Ambassador Haas was sitting next to me, of course, inventing the modern Council on Foreign Relations. And what Richard Haas would say, Rebecca Patterson, on that is it all devolves back to China. Is China part of our domestic financial dynamics now?
It has been for decades. I mean, about 16% of our imports come from China. So if China is continuing to cut prices to make its good more attractive in foreign countries like the United States, we're going to import that deflation to a degree.
Yes.
And then right now, and this is a really interesting topic, not to get too far away from jobs, but we are going to see lower, well, here's the trick. Do we continue to see lower import prices with the tariffs? We had been. Over last year, import prices, we had deflation in them. That should change now, right? But not necessarily from China per se. And then we have lower oil prices that deal with Saudi to get OPEC to increase supply. Oil prices are down almost 10% year to date, although I think they're up a little this morning. But then on the other side of things, as Ellen was just pointing out, if we start seeing immigration turn negative, the labor market's tightening, that's going to be an underlying support to wages. So we have these cross currents going on, and I think it's going to make the inflation picture muddy. And to me, that's still the main priority for the Fed. And I think we'll hear that come through from Chairman Powell today.
Treasury Secretary Scott Bessent is making the rounds of media and various and he's talking about how he likes lower yields. We're getting yields I'm not sure this is how he wants these yields to go down, but we are getting them lower, I guess.
It's interesting. And, I respect anyone in public service, and especially to take a job as difficult as that. But on one hand, you're hearing Bessent say, well, the economy isn't ours yet. We need 6 months, 12 months before our policies are reflected. And at the same time, he's doing a victory lap on lower yields. Well, you own it or you don't. But the lower yields, to your point, I think are coming primarily because of worries over growth, not happiness over deregulation and inflation.
Stay with us after the jobs report on your commute across the nation. Good morning to the West Coast. Waking up on YouTube, subscribe to Bloomberg Podcasts. It's where Rebecca Patterson watches us. She's with us with the Council on Foreign Relations. And Paul, all I got to say is I got a lift in the market, but then it fades. The VIX 25 into 24.27. Anything as good as a Sweeney yield in 4 basis points. I mean, can I say it's a jumble? I mean, it's not newsmaking, but that's sort of what we got today.
No, we've kind of lost a little bit of that lift off of it. So I guess, Rebecca, for better or worse, we're left to an economic policy that's driven in large part by sound bites as it relates to tariffs. How do you kind of frame out the whole tariff discussion for clients? Because it shifts every single day.
Yeah, I mean, and you all talk about this so well and thoughtfully, but the key word is uncertainty. Right? We have a tariff, we get exemptions, we have a pause, it's still coming. April 2nd, the shoe will drop, you know, and so the fact that we don't have clarity on where this is going by direction, I think we do. Tariffs are coming, but how much, how fast, how big? And that causes consumers to get nervous, and they're pulling money out of stocks, and it gets businesses nervous, and that goes against this whole idea of Trump's relaunching of animal spirits.
Which was real, I think, after the election for a number of weeks.
Yes,
it felt real.
People thought we were going to have deregulation. It was going to help M&A and IPOs, and that would support the stock market and the economy. And I think that is all still possible. But right now, that's on the back burner, and the front burner is trade policy and deportation and what all that means.
The Budget Lab at Yale has, after the gyrations, a depression of negative 0.4% on the GDP number. I calculate that as a 16% hit to real GDP. Within the dynamic of that real GDP, somehow depressed, we don't know, and the mystery of inflation, for business people out there, like you sitting on the desk at JPMorgan years ago, do you just assume a dampened nominal GDP?
I think we have to assume a more moderate nominal GDP number this year. Absolutely.
How did Jerome Powell address that? He won't address that at the Booth School, Chicago, where I was not invited today.
No. Just in case you didn't hear that.
Yes, exactly.
But what does the chairman of the Fed do with a new set of nominal GDP dampened?
You know, I think after the payrolls today and the recent data and the recent tariffs, he's going to just continue to say we're data dependent. We're watching. Right now, most of the impact from the policy uncertainty is coming through consumer and business sentiment. It's quote unquote soft data. We didn't see it really in payrolls today. We haven't seen it much in hard data. To the degree the coming months see the hard data, then growth becomes a bigger concern for the Fed. But right now, again, as Ellen and your other guests have said, to date, the real economy, the consumer, businesses have been resilient. Q4 earnings were very strong. So it's the question of, does the past continue? And I think increasingly the market's telling us they are nervous that it won't.
Do you expect growth to materially? Do you expect to see reports coming off the sell side on Wall Street? We're cutting our economic outlook. We're cutting our economic outlook. Our GDP call for 25, for 26. I haven't seen that much yet.
I've seen a few. JPMorgan, I know, has already cut its U.S. GDP forecast twice since the beginning of the year. I haven't checked every other bank, but I would assume there's similar trends underway at most shops. So it is a softer environment that's getting priced in. And it's important to remember that soft growth does not mean necessarily bad equity returns. You can have decent equity returns with moderate growth. You don't have to have booming growth. It's different types of companies that perform well, but we shouldn't panic.
Yep.
It's CFR Mario Ferragamo writing it up on fentanyl, Canada, Mexico. It's maybe outside your remit. What are you learning from the Council on Foreign Relations on the politics of the moment? What are you leaning over and reading a second time?
Well, the politics drives the policy, and the policy will then influence the financial markets and economy. and then the feedback loop goes the other way, right? What happens in markets, as we're hearing from Bessent about yields, then will affect the policy. When you mentioned Canada, Mexico, those politics, I do believe the administration appreciates the magnitude of hurt that could come to the United States from large prolonged tariffs on Canada and Mexico. And I think that's why we did see major exemptions and the pause. But I don't think we're going to get them back to zero anytime soon. The challenge is that we don't have the fiscal room this time to bail out industries. In 2018, the United States gave unprecedented subsidies to the U.S. farmers. We don't. Where are we going to get the money this time? From the new Bitcoin reserve?
Okay, you can stay with us because the Bond Girl just showed up. Kristina
Bond
Campmany
Girl,
with us
excellent.
is right now. Rebecca's clueless. I'm clueless. Paul's clueless. What is it? Paul mentioned it earlier. It was brilliant. Is there a new vector to lower yields, or is it transient?
Look, I think it's still transient, and I think we're range bound, and I think you guys have talked about it this morning, and there is so much uncertainty. The one certainty we have is uncertainty going forward, and there's so many push and pulls of all of these policies, and we've gotten a lot more delivery of some of the growth negative policies so far, and inflationary policies and immigration, and we're really lacking still on deregulation. And I think your point on the fiscal support in 2018, we're talking about fiscal cuts now. So we don't have that cushion when we talk about supporting growth with all of these other pullbacks. And I think the market's patience on kind of the positive boost from dereg is waning thin at this point.
And you look at the bond market on a global basis, and there's changes in Europe.
Yeah, significant. It's been a massive,
unbelievable. Tom and I were talking. It's generational. Some of the things we've seen coming out of the announcements out of Germany and so forth. So does that shift maybe your focus away from the U.S. to Europe?
Yeah. So I think that there's a few things. So we're finally, we've been talking for a decade, maybe more, about really getting a step up in spending in Europe, certainly from Germany, and the willingness to have kind of fiscal support there. And even from the start of the Ukraine conflict, there was an expectation that you'd have more defense spending, and we haven't seen it. So I think it is really a meaningful thing, and you've seen yields in Europe reprice almost 50 basis points. I think there's some opportunities there. And then Japan is the other market that rates have moved tremendously.
It's truly historic. Rebecca Patterson, a question for Kristina Campmany of Invesco.
Yeah, so when I think about Europe stepping up spending and this huge move relatively that we've seen in the bond yields there, Germany can afford it. They still have relatively low debt to GDP ratios, relatively small deficits. Other countries in Europe, including France, Italy, on and on, can't. They can't afford to have suddenly higher yields. Do you think there's any risk that we could get the so-called Liz Truss moment, not in Germany per se, but perhaps in some of these other markets if this bond sell-off continues?
Spreads across Europe are still so historically tight that that's not an issue that we think is kind of on the precipice, even with kind of this reprice. So Italy, Germany is still 100, 110, I think yesterday when I looked at it. These are historically tight levels in the post-2011 European sovereign debt crisis. So I think you have a lot of room to get there. And I think the inflation in the last few years in Europe has actually really supported the fiscal situation.
First chart I looked at yesterday in the Bloomberg poll when I came in at 652 was Italy, Germany. And it hasn't moved.
Which is good. That's good. So here's my other worry. Scott Bessent, our Treasury Secretary, yesterday and today, both at the European Economic Club of New York and then on another channel today, basically was trashing.
Another channel. It's the Death Star.
Well, he's been on Bloomberg a lot. So,
thank you.
Yes, a lot.
Okay, but he was on the Death Star and he made some amazing headlines. Continue.
So thank you. He's trashing the CBO, right? So this is the entity that scores our budget proposals, tells us what the deficit's going to do. It increasingly feels like if they don't like the answer from the CBO, they're going to say it doesn't count and move on anyway. It's not market moving, but at the same time, it's putting into question our institutional processes. Do you think bond investors eventually care that we're ignoring the math?
Yeah, we certainly do care. And I think the dialogue for the last kind of number of years, as you've had all these pressures, have been why are yields not higher? Why are we not pricing in some of these fiscal risks? I think it takes the rest of the world some time to get there. But I think all of these policy changes and kind of the change in tone from the administration towards the rest of the world, I think is changing the world order and will have negative long-term repercussions of how the rest of the world interacts with the U.S. and thinks about it. I think there will be lasting effects.
Paul, try to get a question in here.
Well, Kristina, I just wanted to ask.
I'm taking over.
Are you dialing back your risk here to reflect the fact that we've kind of got a lot of uncertainty out there? Maybe we're not seeing it yet in the numbers, but it's out there.
Look, I think that there's been a lot of uncertainty leading into the election and coming out of the election. It's shifted what it is, like where the uncertainty is coming from. We still think, and I think you guys touched on it earlier, a lot of what's changed the narrative in the last week and a half has been tier 2 data. Like, we haven't seen a lot of weakness yet in the tier 1.
What's tier 2 data?
Meaning confidence measures, like not in CPI and headline, like the big numbers. So I think that there's still kind of, there's some disconnect there, and we've swung with the sentiment in the market has swung a lot more. So I think that there are opportunities, and it's a matter of, with these, like when you have volatile reprices, where are now the opportunities? There's some opportunity maybe more to own front-end European duration rather than the U.S. with how much we've repriced.
Rebecca, is there a concern out there? Should we be concerned that, given some of the uncertainty that seems to be building in this country, that may impact our ability to finance our deficit, finance our debt? I mean, we keep having these auctions and the people keep showing up. The people tell me don't worry about the debt until they stop buying our treasuries.
That's the smartest question I've heard this week. The bottom line is, for our lives, everybody showed up at the margin to buy our full faith and credit. Rebecca, is that at risk?
I think longer term, there's a risk that we see less demand and not enough demand to meet what will have to be increasing supply. So I think that the bias of risk is toward a repricing, a new range for the 10-year yield, which at the end of the day is the cost of capital for all of us and everyone listening to this show.
Final question, Kristina Campmany, just really important. Then how does Invesco see full faith and credit repricing given this turmoil?
Look, I think we've talked about it many times over the last kind of 6 months, is you have to have term premium in the market. Like, you still have a very flat treasury curve, and there needs to be a repricing. So we've talked about 425, 475 range in 10s. We're sitting at or below kind of, the sentiment has pushed us to those levels. We need to reprice the long end higher. And it's not, it's not a Liz Truss moment. It's not, we need to be at 6%, 10 years, but we do over time need to price that.
This has been wonderful. We can do this again. I think
all-star
every
lineup.
Jobs Day, get them in here. And,
on a Friday.
We're enjoying it. We're having fun.
Campmany drove the market lower. We have red on the screen because of Invesco.
Yeah, you push it. The yields on the 10-year were down now 6 basis points here to 4.21 on the 10-year. Maybe the mortgage rate's coming down.
Where is it now? It's under 7, right?
It's under 7, yeah.
High 6s.
Yeah.
What does Invesco say? Housing market get going? What's the mortgage? We're going to quickly here. What's housing look like?
Look, I think housing has a big supply shortage still, which is an issue. But like we actually think that owning mortgages as an asset provides a lot of value because it's inherently a short vol product, and there's a lot of noise. And I think at the end of the day, the Fed right now, policy is on hold, and the Fed is sitting trying to wait through all of this noise to see what is the real economic impact. There's so many push and pulls of policy.
Lisa Mateo's out looking this weekend. Rebecca Patterson, the Counsel on Foreign Relations. Kristina Campmany of Invesco, thank you so much. And our thanks as well to Ellen Zenter, Claudia Sahm, Kim Dawson, a terrific hour here. We thank all of you out on YouTube. Subscribe to Bloomberg Podcasts, and of course on your commute across the nation. Good morning, 99.1 FM Washington, 92.9 in Boston. Bloomberg Surveillance, our economic indicators in this Jobs Day, brought to you by Commonwealth. Join over 2,000 independent financial advisors. They are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. What an hour, Paul. Amazing there.
That was, I mean, I was just...
What was your insight you took away from that?
Well, it's just, I mean, we're not seeing it yet in the data. Some of the uncertainty that has been weighing on this market over the last several weeks, whether it be trade or whether it be geopolitics, we are not yet seeing it in the data. yet.
I totally agree with that. Anna Wine, that's the first question to her coming up here.
Exactly right. So,
okay, the Silhouettes, Get a Job. It's an ancient song for the only one in the studio who's ancient. Good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
The president wants lower interest rates from Chairman Powell.
You can make the argument that this is a really rich market.
With Lisa Mateo on markets.
Stocks are coming off another record high.
And Michael Barr with news.
President Trump signing a wide range of executive orders.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, and Lisa Mateo, Michael Barr. An extraordinary week of global political economics with a jobs report here moments ago. Pretty good thing. Kevin Hassett will be with John Farrow here to get the White House spin on it. Futures are green. They slip red. Paul's been looking for that 24.69. Quickly here, Paul, what do you see in the bond market?
Yeah, the bond markets, yields are coming down pretty sharply here, Tom. That 6 basis point pullback in a 10-year Treasury. We're now at 4.21%.
It can be interesting to see. Bloomberg surveillance this morning, this week, this Friday, brought to you by IBKR. Will the year-over-year change in the U.S. PPI will it exceed 3% this February? At IBKR Forecast Trader, the yes was recently at 39%. What's your take? Trade your prediction at ibkr.com/forecast. From the Interactive Broker Studios, the Bloomberg Business Flash, Lisa Mateo.
Yeah, now we got futures pointing lower, and this is after data showed U.S. hiring rising at a steady pace. The unemployment rate ticked higher. We had non-farm payrolls increase 151,000. That's after a downward revision the prior month, and the unemployment rate that rose to 4.1%. So right now, NASDAQ futures little change. Dow futures down about 0.2%. S&P futures down about 0.1%. The 2-year yield 3.90%, down 5 basis points. The yield on the 10-year, 4.22%, and that's down 6 basis points. To currencies, we have the Bloomberg Dollar Spot Index down about 0.1%. We do have chip stocks. Say that 3 times fast. They're rebounding. Broadcom up 8%. AI growth kind of fueled an upbeat forecast. NVIDIA up 1%. And we have ASML. Their ADRs up 2%. The opposite over there, Hewlett-Packard, though. Shares down 16% after its outlook trailed estimates. And another news, the companies that make White Claw, Pabst Blue Ribbon, well, it's considering a lender takeover. Sources say City Brewing, it's in talks with creditors. That is your Bloomberg Business Flash. Paul and Tom.
Paul Sweeney, lead banker on that.
Yes, exactly. I'm on top of it.
Right now. One of the most beautiful, successful buildings in Washington, and we all know our favorite monuments, the Lincoln Memorial and that, is the Canadian Embassy.
Really?
It is sometimes in modern architecture, they get it right. Canada has gotten it right with Kirsten Hillman, their ambassador to the United States. And that's an important conversation for Margaret Brennan on Face the Nation this Sunday. Margaret, I can't imagine the 14-hour Zoom call you and your team have had trying to get to Sunday. What do you discuss with Kirsten Hillman within the cacophony of our politics?
Oh, so much on the 1 month reprieve on auto parts and things in the free trade deal known as USMCA. But then you hear the Ontario Premier saying, nope, retaliatory tariffs staying in place because you can't mess with us like this. I want to sort this out because it seems like the tension is escalating and it's confusing. And by the way, markets, diplomats, and lawmakers are wrong when they keep assuming what President Trump says isn't true. He believes in tariffs, period.
Well, you've been talking all week with the administration about this. What Paul and I have noticed is, and particularly with Commerce Secretary Lutnick, we act, then oops, never mind. It's like Gilda Radner's down there running our politics. Margaret Brennan, is this a new habit that we need to get used to with the Trump administration? Oh, never mind.
Yes.
Yeah.
Basically, it keeps us all busy on the reporting front. But yes, it seems there's a lot of movement, a lot of activity, and there's not always a strategy. Sometimes figuring out, who is actually we went through this exercise in the first Trump administration. We're seeing it on steroids in the second, where there's a flurry of activity and you're still trying to suss out, okay, this person has the job title, but do they have the power? When the president says it, is this what he meant? Or do I listen to the cabinet secretary who runs that portfolio, right? Like Howard Lutnick on tariffs. It's this, it's a different type of analysis that you have to do, both as a reporter and, as I imagine, as a trader, trying to figure out which statement is the one to believe.
Margaret, are you surprised that maybe we haven't seen more response either for or against from Congress? We know that the tariffs are the purview of the president, but we haven't heard much from Congress.
We haven't heard much from Congress, period, evergreen statement since January 20th. But you are hearing concern, as we saw in the markets, right, with what the president is doing and how it may implement change in the states that these lawmakers represent. So once we start to see political blowback at the local level, maybe we'll hear more from lawmakers, but we're not hearing much. One group that I'm very interested in for this Sunday is the Problem Solvers Caucus. I have Brian Fitzpatrick, Republican from that Bucks County area, Pennsylvania, Tom Suozzi from New York. They are people who are in the middle of their parties and trying to reach across and work with each other. I like to hear from people who are trying to get Congress to work and to move and to legislate. And we're going to talk to them about this congressional funding showdown and possible shutdown, as well as funding for Ukraine and border issues.
So you're going to sit there with the Secretary of Homeland Security, and you're going to say, Governor Noem, you have 260,000 employees. How many will get a 4th of July paycheck? I mean, that's the heart of the matter, Margaret. Is we're moving bodies out. Can I dare say these people actually do stuff, that they're not lazy, useless people?
Well, we're going through this exercise now of Elon Musk being pulled back a bit by the president, and the president saying, the people who run the agencies should have a say in what happens at the agencies they are at the helm of. So you're seeing a little bit of tension clearly here, and there's lack of clarity, of course, not just because of the ongoing lawsuits affecting many of these agencies, but that bigger question of, can the president do some of these things without consent from Congress? All of this testing of the institutions that we are seeing in real time.
And for those on Bloomberg that didn't see this, in the last 8 hours, 10 hours zeitgeist, the president saying to the cabinet officers, including Governor Noem, now head of Homeland Security, with Margaret this Sunday, is you guys are really doing this, not Mr. Musk.
Exactly. Margaret, I want to go right into your wheelhouse, foreign affairs. That is still front and center. It looks like the president would like to see something done in Ukraine sooner rather than later. Where are we on that whole process, do you think?
Oh, good question. I know that there are plans underway for a meeting in Saudi Arabia Tuesday or Wednesday. In Jeddah, Saudi Arabia is what my sources are telling me, between U.S. and Ukrainian officials. Now, exactly who's at that table, unclear. When I spoke to Keith Kellogg, the envoy to Ukraine yesterday, he indicated Secretary Rubio was most likely the diplomatic protocol person to sign off on a deal. But it's still unclear if you get this economic and minerals agreement, which, by the way, on Sunday, the Treasury Secretary told me was off the table. Then does that lead to peace talks, or what does this mean exactly? Keith Kellogg was very sharp in his comments yesterday and said that this cutoff in intelligence, this cutoff in military equipment is a pause, but he couldn't say what would unpause it, what would turn it back on.
We're going to stop the show now with Margaret Brennan, folks, and this is really, really important. Margaret, no one's listening. You won't get in trouble. I read General Kellogg's entire biography. Folks, let's begin with it. The decorated Vietnam veteran is 80 years old. I don't think people know that. His public service is extraordinary to the nation. I'll editorialize, Margaret, so you don't get in trouble. Secretary Rubio's got deer in the headlights. So give us the dynamic right now of Rubio and Kellogg with the Oval Office.
Well, and then you've got the other envoy, Steve Witkoff, adding to that interesting triangulation here. It is hard to suss out, and that's what I'm saying with this administration, suss out who is running what. When I was asking Keith Kellogg yesterday, what's the dynamic, he said he has an office on the 7th floor of the State Department. Steve Witkoff's on the 5th floor. They both have offices at the White House. Rubio said run in parallel. But they had two completely different and very different approaches to a benchmark deal. With Steve Witkoff telling me weeks ago that he was going to work with this Istanbul Protocol, this very pro-Russian plan from 2022 and go from there in the negotiations. Keith Kellogg says, no way, no how. That is so harmful to the Ukrainians. So that's a pretty big divide, and I don't know where Rubio is in the middle of that. It's an open question.
We got to go, Margaret. I know you have to, too. That's the smartest analysis of 1600 Pennsylvania Avenue I've heard this week. The gap between General Kellogg and Mr. Witkoff of New York. Margaret Grennan, of course, Face the Nation. See it on the CBS television network. Sunday, hear it on Bloomberg Radio, 2 p.m., New York, Washington, and Bloomberg 92.9 in Boston. Paul?
Tom, stocks have kind of rolled over here. Futures minus 20 on the S&P, minus 180 on the Dow, and minus 40 on the NASDAQ. Let's get to it. Gina Martin Adams, Chief U.S. Market Strategist for Bloomberg Intelligence, joins us here. Gina, it just seems like, we've got the S&P kind of 7%-ish off of its recent high. A lot of this uncertainty really weighing on the market. What kind of conversations are you having with clients these days about how to navigate these times?
Yeah, it varies, frankly, Paul. It's a lot of confusion, a lot of on again, off again. Tariffs have been a big source of discussion for the last month or so. Now we're starting to talk about weakness in the job market that is emerging, not only because of layoffs at the federal level with respect to DOGE, but also because of public sector layoffs. So this week we had two pretty negative employment reports, even though the official payroll report today was somewhat benign. Earlier this week, we got news from ISM manufacturers that their employment prospects are now in contraction. Then we got layoffs announced by the Challenger team that are the highest levels we've seen in a single month since back in the pandemic. So very clearly there is some budding weakness in the economy. But it's coming in small waves and not necessarily in all of the reports at once. And so investors are trying to weigh that out. The other thing that's happening is a non-economic discussion, and that is suddenly tech has competition, right? So earlier in January, we got the news from DeepSeek. Then this week, we got news from Alibaba that there are competitors emerging in China in the race for AI technology implementation, and that is creating waves in the market as well.
Gina, here's what we're going to do. Please stay around if you can. I don't know what your day plan is here for Friday morning, but we'd love for you to stay around. Gina Martin Adams with the equity markets. And now we're going to go. This is our John Farrell, I believe, in conversation with the gentleman from the White House, Kevin Hassett. He is a PhD from Pennsylvania. He is acclaimed for an optimistic call on the American economy and on the American stock market. Took a while to get there, but we got to the Kevin Hassett, now 36,000, and he's someone in economics trying to explain to 1600 Pennsylvania the modern economics around the politics that we are observing. Paul Sweeney and I are looking at Tesla. It gives way 263 to 260 pre-market here, 259, and now Tesla printing 258, 258 as well. Just one stock to watch this morning. Futures negative 23. We have reversed from green in the screen to fractionally green, and now a weight to the tape with a 0.4% SPX future into the opening. The NASDAQ down 0.3%. The VIX is now extended out to the Sweeney mark. Sweeney doesn't look at the 30 Lehman Brothers. You know, it's 25 is enough.
25 gets your attention.
25.08, and we are looking at yields, and they do come in. The 2-year yield, wow, 6 basis points, a deterioration in the market. Here are John Farrow with Kevin Hassett.
Live from New York City for our audience worldwide on TV and radio, I'm Jonathan Farrow. Joining us now, I'm very pleased to say, is the National Economic Council Director, Kevin Hassett, following the jobs report earlier on this morning. Kevin, welcome to the programme, sir. It's always great to get your thoughts. I just want to take a beat and take a big step back and just think about where we are and the moment we're in. This is what we've heard from the administration over the past few days. The president has said there will be a little short-term interruption. The Treasury Secretary, Scott Bessent, spoke this morning and said there's going to be a detox period. You said last month the jobs market was worse than markets thought. What exactly are you, together with other officials and the president, this administration, what are you preparing us for?
Oh, we're preparing you for news like today, the great jobs report. I think one of the things that you see, if you look at it, is exactly the objectives of the Trump administration, and the fact that even though we got a lot of work to do, we got to pass the tax cuts and get this deregulation train rolling, is that we're going to be reducing government employment and reducing government spending and increasing manufacturing employment. And as you can see in the jobs report today, you're already seeing a pivot in that direction that's a huge one. And so last year, 111,000 manufacturing jobs were destroyed by the Biden administration's policies. And in this month alone, in February, we got 10,000 manufacturing jobs and 9,000 auto jobs. And as you know, those auto jobs are, here, they're going to be paid well, and they're here for a good long time. And that's really just sort of a down payment on the Trump policies that are going to skyrocket into a golden age as soon as we get the tax cuts passed.
So, Kevin, I hope you're right, but what I've heard over the last week or so regarding the economic data, when I spoke to the Commerce Secretary, Howard Lutnick, Secretary Lutnick said that this was Biden data over the last month, that this was not Trump data. So if it's good, is it Trump data? And if it's bad, is it Biden data? How does this work?
Let's go into the specifics. So what specifically has happened is President Trump has made a big effort, along with Elon Musk, to find workers that are unproductive and to get them off the payrolls. And so we see government spending going down. So is that a Trump effect? Yes. Manufacturing and job creation in the auto sector is happening because people are anxious about future tariffs and they're already onshoring production. Is that a Trump effect? Yes. But it's true that we've inherited a lot of terrible Biden policies. They want to, get expensing gone and so on, and that's bad for capital formation. We're going to fix that. So we haven't fixed everything, but already the things that we're fixing, you can see in the data, and I think it's really quite remarkable.
Well, let's talk about the manufacturing data as well. We had that over the past few weeks. You're familiar with ISM manufacturing. You're familiar, I'm sure, with the respondents in the surveys, and this is what they had to say. The uncertainty about tariffs keeps us cautious on spending. Customers are pausing on new orders as a result of uncertainty regarding tariffs. The incoming tariffs are causing our products to increase in price. Are you hearing the same message from businesses? Are you hearing something different?
What I'm hearing is a massive amount of onshoring. We've got more than, $1.5 trillion in commitments for new factories, and you're already seeing it in the auto data. I mean, think about it, how hard it is to create a job in the auto sector. To have 10,000 in a month means that the attempt to onshore activity, to make it so that the jobs are created here and the money isn't just, frittered away to foreign countries, is exactly what President Trump's objective is, and it's right there in the data. Now, I know that it's 1 month and the data can blip around, but I was really, really stunned. And the other thing I was stunned about, which I know you guys follow this a lot. In fact, Anna Wong at Bloomberg is one of the best young economists I know at looking at the numbers, is that it was a really bad flu season. And so when I adjusted for the flu, what I thought this number was going to be, it was way below the number that we got. And so I was very positively surprised by this number once you adjust for flu. And then you see that all these jobs that are created in manufacturing. And finally, if you go back and look at the Biden job record, mindful of the fact that they revised it down 1 million jobs last year, don't forget that a lot of the job creation was government workers. It was government workers. About a quarter of the job creation over the last 2 years was an increase in government workers. And so if you take those out and then still have a strong jobs number, that's a great economic outcome.
I'm pleased you're in a good mood, because that's refreshing. Because I have to tell you, over the past week or so, Wall Street is full of a lot of gloom right now, Kevin. I'm sure you've heard some of it. So here's some of it for our audience and not just for you. Barclays say US recession no longer unthinkable. Morgan Stanley this morning downgraded growth forecasts, upgraded the inflation outlook. And this is the why. This came from Deutsche Bank. Another talented economist, Matt Lazzetti. Considerable downside risk to the growth outlook are mounting. Trade policy uncertainty has hit historical levels. Financial conditions are tighter. Sentiment indicators signal weaker growth, and more trade actions are likely to come. Kevin, the people that we've been speaking to want clarity on trade. They want to understand that maybe in a month or so this will be done, whether the tariffs is 10, 15, 20, 25. When can they expect that much-needed clarity?
Oh, absolutely. I think in some sense that you've got quite a bit of clarity already. There's no uncertainty. There's going to be some tariff. It's going to be reciprocal. If you don't like tariffs very much, then reciprocal could be a great thing for you, because then countries around the world will be lowering their tariffs. But the president believes that if we replace income tax revenue with tariff revenue, it can make everybody better off. And so if we take $1 away if you buy a foreign good and then give you $1 back in an income tax, you're going to be better off, is what he believes. And I think what's going to happen is that markets are going to watch numbers like the numbers we see today, and they're going to gradually see that President Trump is right. This is how you build a golden age.
All these companies are going to be worried about what's still to come and will hold off on making these decisions because they don't know what policy actually is. A month from now, we'll get more detail on tariffs on the likes of the Europeans. We'll also get an update on what's going to happen with Mexico and Canada. Kevin, can you share with us whether the president has provided any metrics to the Canadians, to the Mexicans, on what they need to get done between now and next month?
I can tell you that we've been in the Situation Room looking at the very best info we could get from our intel agencies on the progress that's being made on the drug war. And that's what this whole Canada-Mexico thing is about. It's about a drug war. And there have been some parameters that have moved because it's an active negotiation. And President Trump is seeing progress of the drug war, both in Canada and in Mexico. And he's, in the end, trying to save the tens of thousands of American lives with this drug war. And that's why he's adjusted when he's seen progress. But yeah, we've got people, satellites and everything, looking at where the fentanyl labs are. And we're making progress. And I think that that's separate from what we're going to see in April, where uncertainty will be resolved because we'll have a report on the Reciprocal Trade Act.
The European issue is different. You've been clear about that, and I think we all understand it. There's been a big change this week over in Europe and potentially in the months and years to come. The Germans are getting ready to spend on infrastructure and on defence. Do you and the administration like what you're hearing from the Europeans in the past few days? And do you think that would lead to a different approach when it comes to tariffs in the next few months?
Right. Absolutely, the Europeans need to make a lot of progress on defense. They've been free riding on America for a long, long time, but they're our friends. That's a foreign policy issue. But on an economic policy issue, think about it this way, that in a typical month, we're importing about $35 billion worth of autos and exporting about $13 billion worth of autos. And that's because of all of the non-tariff barriers and tariffs themselves, like the Europeans have a 10% tariff on autos, that President Trump's views is unfair. And so against that backdrop, the idea that we created almost 10,000 auto jobs this month shows that he's on the case. And he's fixing these things that are unfair for American workers, and he's making progress already in February.
Kevin, do you think the reciprocal tariffs, the focus of them, will be on autos, or is it much broader than that?
Oh, it'll be much broader than that, yeah. We basically want trade to be fair for Americans across everything,
Kevin, as you know, there's been some jitters on Wall Street, so let's finish there. In the equity market, we've seen a pullback of 5-6 percentage points. Not too dramatic, but there's certainly some fear out there, and you see that in sentiment indicators. Traditionally, with the Trump administration, particularly in the first term, we became accustomed to what became known as the Trump put in the equity market. Secretary Besson says there isn't one anymore. He says it's all about the upside, and there's a big call. I understand that. But the president said just yesterday, I'm not even looking at the stock market. Kevin, what is the president looking at? And if I can leave the interview here just with this final question, what is his metric for success through this year? What's that number one data point that we should be judging this administration by?
Well, I think that obviously when you're looking at the economy, there are lots and lots of different things that we care a heck of a lot about. For the drug war, the thing we care about is reduction in deaths of fentanyl. In the economy, what we want to do is see a creation of manufacturing jobs, especially auto jobs. And we want to see a successful tax bill. And I think that all of that is going to give us the 3 or 4% growth that we're all hoping for, that we got in the first term and that we'll get again. But I think that just picking one metric is not enough for the president. But I can tell you that last night when I was in the Oval late at night talking about the jobs numbers with him and telling him about the 10,000 manufacturing jobs and 9,000 auto worker jobs. He was really, really pleased to see the numbers.
Kevin, we're pleased to catch up with you. Appreciate the spirited conversation, sir. Enjoy the weekend. Thank you.
Great to be.
John Ferro with Kevin Hassett, National Economic Advisor in the Oval Office late at night, probably with 2 scoops of ice cream. The president tweeting, Paul, I think we've got to go through this before we dash to Gina Martin Adams. This on Ukraine. Paul, you brought this up with Margaret Brennan. Let me read it somewhat in entirety. It's long. Based on the fact that Russia is absolutely pounding Ukraine on the battlefield, the president, I am strongly considering large-scale banking sanctions, and tariffs on Russia until a ceasefire and final settlement, etc. To Russia and Ukraine, get to the table right now before it is too late.
Thank you.
Thank you. Yeah. From the president.
All right, there you go.
There's marching orders. Gina Martin Adams with us with Bloomberg Intelligence. She's been patient this morning. Given the turmoil in the Oval Office, Gina Martin Adams, given a tweet on Ukraine, what does a long-term investor do? How do you take part in Bloomberg surveillance but not let it affect wisdom out 3 years?
I think that's a great point, because right now we are caught in a lot of short-termism. But there is one big trend that has emerged so far this year that I think will only be exacerbated by the Trump policies, and that is performance of non-domestic stocks, where we have seen over the course of the last several years, U.S. stocks outperform materially. In an environment of quote-unquote U.S. exceptionalism, U.S. stocks outperform materially. Tech stocks in particular in the U.S. really drove that outperformance. But we're starting to see so far this year a rotation to non-domestic equities. Europe especially is starting to outperform. This is very related to the Ukraine question that you started with. If Europe does ultimately come together with a cohesive strategy for defense spending, with a cohesive economic strategy, with the cohesive strategy to try to promote growth and promote Europe as a European entity, that could be one of the single most impactful outcomes of policy that we're not talking about as much on a day-to-day as maybe we should, but it's starting to bubble up into the equity market. Likewise, China is becoming an investable market once again. As China is coming into the scene for AI competitiveness, we're seeing Alibaba make announcements. DeepSeek made the announcement earlier this year. So we're starting to see a competitive landscape shift in tech, which is favoring non-domestic assets as well. So probably the biggest question you want to ask yourself as a global investor is, should I be continually so overweighted toward the U.S., or should I be thinking about this new world order creating new opportunities in non-domestic equities? And our view is that non-domestic stocks have been the place to be so far in 2025. They may continue to be the leaders in the global equity markets as we sort of assess the outcomes of this policymaking that's happening from Washington.
Wow, that would be a big sea change, because I think as recent as late last year, Gina, we were seeing reporting about big flows into U.S. equities by international investors, and those days you're suggesting maybe waning?
It appears to be the case, especially because we got to a point where U.S. assets were extremely overvalued relative to the rest of the world. If you think back to 2021, when stocks peaked just after the pandemic, basically every global equity market was overvalued. But when we got to 2024, most global equity markets were actually extremely discounted by comparison to the U.S. We had built up an incredible store of optimism toward the U.S. specifically through the last several years. That optimism appears to have peaked with 2024, and now we're going through this big adjustment period. As we go through that adjustment period in the U.S. as well as globally, it's allowing for opportunities to bubble up in the rest of the world equity markets. It's allowing for growth to start to recover in those non-domestic equity markets. And we're starting to see capital flow accordingly. Not necessarily from the U.S. investor abroad yet, but the Europeans very clearly are investing in Europe. The Asian markets are clearly focused on China. It's up to the U.S. investor if they're going to diversify ultimately. But I think we want to question this idea in an environment in which we are deglobalizing, in an environment in which we are not going to continue to lead the global trade order in the U.S., U.S. multinationals may no longer be the best place to access global growth. Gina, and we have to think about diversifying our portfolios accordingly.
All right. I got 30 seconds. What are you going to think about this weekend? I mean, what's within the massive Bloomberg Intelligence combine?
Yeah.
What's your curiosity this weekend?
That's a great question. Hopefully not as much on tariffs, but I'll still be thinking about tariffs. I think we have to think about where these reciprocal tariffs are going to go.
Interesting.
And ultimately what that will mean for global trade. I do think we have to really spend a lot of time on Europe as well. You know, the news out of Germany this week was potentially game-changing. Where is Europe going to head with respect to defending the continent against what's happening with Russia and Ukraine? I think that Europe is going to be a big part of the conversation over the course of the year.
This has been wonderful. Gina Martin Adams, and thank you so much for being patient, as we heard from the White House, and Kevin has it. Gina Martin Adams driving all of our equity coverage. Did we have her, was it 2 or 3 days in a row?
Yeah.
It's all Gina Martin Adams all the time.
I can do that every day.
You know, we'll see her Monday. Futures, I mean, I have no idea what to make of the data check. I mean, futures negative 18. I have no idea how we'll open. The VIX was 25. It's in a little.
Exactly.
The Sweeney yield, it's in 3.90%.
Yep.
And the dollar is weaker. I mean, my head hurts.
Let's open them up here.
It's spinning. We need to open the market, Lisa Mateo.
Yeah, we don't know. Is there some light at the end of the tunnel this pretty rough week? Let's start with the S&P 500. Well, it's down 0.3%, 18 points, 5,719. The Dow down 0.4%, 182 points, 42,400. And we move on to the NASDAQ, just kicking in at down 0.2%, 39 points at 18,032. So a lower start to the end of the week right now. The 2-year yield 3.92%, down 4 basis points. The yield on the 10-year 4.23%, and that's down 4 basis points. And finally, the Bloomberg Dollar Spot Index down 0.3%. That is your Bloomberg Opening Bell Report. Paul and Tom.
Lisa, thanks so much. She has to speak to Jerome Schneider, short-term paper king at PIMCO. Tiffany Wilding joins us now, economist for PIMCO, after the jobs report. Tiffany, what are you going to tell the animals like Jerome Schneider? What do you tell them about this cacophony we're within?
Yeah, I mean, overall, we read today's report as relatively benign, but consistent with the U.S. economy that is likely downshifting in terms of growth, both real GDP growth and labor market growth. You know, now when we look out forward, you know, we see the increasing risk that the U.S. labor market's actually slow potentially more than than people are really expecting. Obviously, there's been a lot of discussion around DOGE. We're seeing within various surveys that you could have a 50 to 60K, aggregate of separations, folks that have been fired. That could hit the report in March. And in addition to that, we think that immigration flows have been a very big contributor to the payroll gains that we've seen over the last several years. So now that those flows are slowing and stopping, we think that's going to contribute also, to a potentially meaningful slowing in the labor market.
So put that all together here. We're not seeing any of that in the data yet. So do you expect the Federal Reserve to continue to kind of sit on the sidelines until they do see it in the data?
Yeah, I mean, ultimately, I think the set of policy pivots, that we've seen from the Trump administration puts the Fed in a bit of a tricky spot because the economic effects of those are towards, somewhat slower growth in the near term, with the risk of a more material slowing. If you have business and consumer confidence that's deteriorating more notably, but at the same time, these policies are also, somewhat inflationary, at least in the near term. Obviously, tariffs are, kind of a price level adjustment. So they're a one-time, inflationary impulse, as economists say. But nevertheless, that will have to be within the calculus for the Fed. Ultimately, we think they will react if they believe inflation risks are above the risk of recession risks. So that will be the calculus for them.
But of the ambiguity that's out there, do you tilt to inflation risk or growth slowdown, which gives us a lesser inflation?
Yeah, I mean, I think at least for right now, I mean, it's all about, what's kind of priced into markets and initial conditions in that regard. And when we look at the price action, since the election over the last, several months or so, basically what we see is a market that is pricing in, pretty low probabilities that the Fed will have to, to react more aggressively to downside growth momentum. That's kind of changed and reversed more recently, but we think that, here the risk relative to market pricing is that you do get a growth scare, as a result of these policies, at least in the near term. Now, one caveat to that is, we've been arguing it's kind of like eat your vegetables first and have your dessert later. We're certainly getting a lot more, kind of more growth disruptive policy announcements here, trade, immigration, government efficiency. Later this year is when I think we're in the real debate about tax cuts will start, and we could also see some, more movements towards financial deregulation and things like that.
Too short a visit. Tiffany Wild, thank you so much. Let's do it longer next time. She is with PIMCO. I know the tape is trying to fight higher here. I mean, off the gloom of 20 minutes ago, Paul, it's I don't want to oversell it, but Tesla was at a 258-ish, and it's popping 263 right now.
Yeah, not bad. I mean, the S&P, we're down 5 points. Again, that's off the low here. The Dow's off 50 points, but the Nasdaq actually has turned positive. Tom, up 3 points.
The churn. This is way more than it. This is not a normal Friday.
This is not a normal Friday.
This is like work.
Exactly.
Stay with us on YouTube. Subscribe to Bloomberg Podcast, growing each and every day. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, we've got little movement in stocks, and this is after the first jobs report the new Trump administration showed U.S. hiring remained firm in February. Right now, we'll start with the Nasdaq, up about 0.1%, 17 points. We have the Dow down 0.3%, 132 points, and the S&P 500 just down about 0.1% or 5 points. The two-year yield, 3.92%, down 3 basis points. The yield on the 10-year, 4.23%, and that's down 3 basis points. We have the Bloomberg Dollar Spot Index down 0.3%. Chip stocks starting to battle back. That's thanks to Broadcom. It reported that surge in AI revenue for the last quarter. So Broadcom up 6%. We have NVIDIA up 1.5% and ARM up more than 2.5%. Then meanwhile, Hewlett Packard Enterprise, their shares down 15% after its outlook trailed estimates. And strong sales from Gap has shares higher, up about 12%. And since we were talking eggs earlier, who doesn't love a good bacon, egg, and cheese sandwich, right? Okay, maybe turkey bacon. Sorry. No. Okay, but last week, you have to pay more for it. Cafe Olympia, 55 in Midtown. It raised the price of the egg sandwich by $2 to $7.75 for an egg sandwich. So it's going up. That national index, we have one, of bacon, egg, cheese, bread, and coffee prices jumped more than 20% in the past 12 months. Wow. That goes to show you. That is your Bloomberg Business Flash. Paul and Tom.
Daily Provisions doing it right, and they went up too as well. Tracy Alloway, Joe Weisenthal have a conversation with two of Chicago, David Booth and the giant of finance, Eugene Fama, as well. There will be great conversation today at the Booth School Chicago panel here. Michael McKee will be in attendance. I will not.
We've established that.
I did not get an invite. Anna Wong forgot how to spell Keene. She joins us right now from the University of Chicago. It has been so profound this year that you have the gentleman from Penn Kevin Hassett, quoting her. Let me read you the first sentence of the PR from Caroline Leavitt, the White House, moments ago. In 1 month under President Trump, the American economy is soaring back to greatness after the economic calamity left by Joe Biden. What is the mathematics of, on a labor basis, when an administration begins? It's not when they put the hand on the Bible. How many months later is it for you?
Well, according to the administration, it would be 6 to 12 months when it becomes Trump economy. But in today's jobs, for me, I thought that the surprising element in the jobs report was that the shrinkage of the federal government is apparently already showing evidence in this report. So one of the reasons why we were expecting a much lower print than today was we expect a shrinkage in the government hiring. Apparently, it's even worse than what we thought. We had expected a slowdown of 28,000 in the government sector. It was actually a slowdown of 33,000.
Okay, I want to cut to the chase here. There's a run rate of non-farm payrolls, which is like the speed of the economy. You are acclaimed for gaining that. Where is the run rate now? And with policy like DOGE, where are we going to be?
Right. So the runway rate based on 6-month moving average is about 190,000. And factor in the overstatement in the birth and death model, it's about 90,000. However, the employment break even to stabilize the unemployment rate has also fallen. So Bostic, the Atlanta Fed president, estimates 75 to 100,000 per month is about break even. We estimate 105,000. So, you know, at a pace of 90,000, it's just slightly below the break even. And so in Powell's word, that means the unemployment rate should be inching up about by 0.1 percentage point every other month. This is why we expect the unemployment rate to hit 4.5% at the end of the year, if you calculate this math of 0.1 percentage point every other month. In terms of the DOGE, we are expecting the federal government shrinkage will lead to about 500,000 federal workers going into the job market this year. So the question is, how can whether the private sector can quickly absorb this? And in today's print, what we saw, the strength, which surprised me, was in the goods producing sector, particularly manufacturing, which is not a consoling sign, because I think what we're seeing is that with the front running of these goods ahead of the tariffs, it's ramping up manufacturing activity. You see that China's exports is soaring, but that's not a permanent thing. It's definitely a temporary thing. And as all these tariffs come into effect in April 2nd, I think what you're going to see is this steep catch-up and drop-off.
Moments ago, the laureate Krugman agreeing with Anna Wong that with the mid-month math here, Paul, we're still within a Biden economy with today's statistics. That from Paul Krugman out on his Substack.
So we've had commentary from the administration, from National Economic Council Hassett on Bloomberg Television, from the spokesperson, we just heard White House spokesperson, saying this economy is great, this economy is coming back. The president's policies are working very well, yet the financial markets are not necessarily reflecting that. The stock market's off 7% from its high just recently. How do you think this is all going to play out? Should we be concerned about tariffs? Should we be concerned about changes in immigration? How do you think about that?
Yeah, I think on the tariff front, I think the financial market is calling the bluff on President Trump, because I don't think that a lot of the tariffs are priced in the inflation compensations or financial markets yet, and I think rightly so for them to be doubtful, because in the past month and a half, it seems that President Trump has been delaying these waves of tariff, and also I think part of it also has to do with this expectation of a Trump put on the stock market. And if economic activity in the labor market is going to be deteriorating faster because of DOGE layoff, it's going to call the bluff on President Trump.
I just looked away from the screen, Paul, to see if my Blue School panel invite was in my inbox. And I look at the lift in the market, Paul. Help me here.
Well, Anna Wong's sitting in a big chair. That's what happens. So, Anna, what are you looking at over the next coming weeks, maybe months, to get a sense of where this economy is going?
I think the fastest indicator you can look at that reflect the rapidly changing temperature of the labor market is the jobless claims, with the federal government jobless claims. And in fact, it is one of the Bloomberg reporters here, Mark Nicut, who discovered that the Department of Labor already published the jobless claims for federal workers yesterday for next week, which everybody thought is only going to be out next week. Okay. And we're seeing a sustained increase in jobless claims from federal workers.
I mean, this is a brutal question, a really rude question. You're expert on this, and a lot of us talk. You've lived it. Where are those people going to get jobs? All those DOGE exiting people. You could have been one of those people. Where are they going to get jobs?
Tom, that is an excellent question, right? So, for example, in today's jobs report, one of the places which surprised me, where I had forecasted lower job growth, is professional and businesses. And I now saw that much of the pop is in waste management.
Waste management?
Yes.
Always a growth business.
So like when Stevie Nicks, with Fleetwood Mac, when Stevie Nicks was starving, she was in waste management, cleaning houses and cleaning bathrooms. Right? Seriously, where are the people of Bethesda, Maryland, going to get jobs?
But seriously,
Waffle House?
Exactly, seriously, Tom. That's exactly the point, that the skill mismatch of these government workers who are actually very highly skilled and highly specialized.
What are you, a Biden supporter? Continue.
They want to find jobs in administrative role, informational sectors, these financial sector, but those sectors, hiring pace is not keeping up with the inflows into the unemployment in those sectors. Whereas the places where we need more workers are like waste management and professional businesses. So there's a skill mismatch.
Have fun at the University of Chicago Booth School panel with Michael McKee.
And give Tom's regrets.
Maybe on Monday. Yeah, maybe on Monday. Let me know what happened. It is a spectacular panel with the leadership of Michael Feroli of JPMorgan, and without question, the star there today among the worthy will be Anna Wong of Bloomberg Economics. She's been on fire over the last 18 months with her analysis of our labor economy. Sweeney driving the market higher, the Dow up 100. This is just, I don't know what to make of it.
I don't know either. I mean, I'm looking at just, the intraday volatility has just been extraordinary. So the absolute moves, we continue to have that drawdown, Tom, as the kids call it, 6-7% from that recent high just a couple of months ago.
Ari, bring up the drawdown panel for YouTube right now. The drawdown on futures as of earlier this morning was 10% for the NASDAQ 100, but only 6-ish drawdown, as they say.
Right.
I did the math.
For the S&P, yep.
I went to drawdown go on the Bloomberg. Green on the screen here, the VIX nicely under 25, 24.05. We're on YouTube. Thank you. Subscribe to Bloomberg Podcasts.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney on Bloomberg Radio.
Good morning, everyone. What a week it has been. Joining us now, name, image, and likeness surveillance correspondent Emily Grafeo, who with the dreaded Max Abelson is hit a home run on my past. This is a Bloomberg Take article of immense New Statesman-like length An all-American ETF empire drew billions in a regulator's eyes. I'm going to cut to the chase. In the old days, everybody got out the Amex, and it was 1-week trips to wherever, and we'd love to do business with you. I believe it's changed. Are people within your story, tell us about First Trust in your story, are they guilty of what was normal business practices back then, or is it something about the here and now?
I won't use the word guilty because I think that brings in a legal complexity that I probably don't want to get into right now. But yes, the wining and dining of old Wall Street has mostly gone away in the ETF world now. The margins are low. There's not even a lot of money to spend on wining and dining. FINRA has specific rules on wining and dining, but they're a pretty gray area. One of the main rules that we go into in this story is that they say that entertainment, dining out with clients, you can do it. It's okay. It can't be so frequent or extensive enough to raise any question of propriety. And you can't dangle an entertainment in exchange for a sale. Essentially, you can't do a pay to play. And what our reporting shows is that we have internal emails, we have interviews with former employees. This company, First Trust, has sometimes come right up against that line of what FINRA allows and sometimes arguably past that line.
You have a great, this great deep reporting in this Big Take story, as always. The ETF giants, you compare the costs. And the cost for this First Trust, which is the focus of your article, much higher than the big guys, Fidelity and, the Schwabs and all those guys, BlackRocks, Vanguards. How do they do it?
So, I mean, one answer, if you could put the pieces together, is that they justify the higher fees with, paying closer attention to the advisors, the financial advisors that they're selling to. They help you with your business. When you call, they pick up the phone. And we did come across that in our reporting. But we, again, also came across this idea of extensive wining and dining and potentially pay to play.
This is so important for our global Wall Street audience. You're going to come back next week and do this. But are others like on your beautiful chart, First Trust, the Van Kampen people, Chicago 1 million years ago, and maybe Van X there as well. Is Fidelity or Vanguard wining and dining?
We don't think so. When you look especially at their revenue matches their size. First Trust makes as much revenue as Vanguard. They're 15 times smaller. So that anomaly in the data was something that stood out to us throughout the reporting. But from what we know, the wining and dining is kind of winding down in the ETF world. But this company still does it.
You watching UNC Duke this weekend?
I will.
No, she's in Virginia.
Put it on, I guess. Who should I root for?
She'll put it on. She'll put it on without the sound on.
Exactly.
Yeah.
Congratulations to you and Max
Bloomberg
Abelson.
Business Week story.
I haven't talked to Max Abelson in like 6 years. I'm not big enough to talk to him.
Well, I'm sure Emily drove the bus on this story. Let's be clear.
Well said. Emily Guffey. We're gonna come back on this next week for all of Global Wall Street. This is really, really important. There's some amazing names in their chart, including Vanguard, Schwab, BlackRock, Invesco, JPMorgan, and out on the periphery, Van Eck. And then the lead of the story on how revenue is gained is First Trust. Reporting for Bloomberg News, Emily Guffey and Max Abelson. Paul, are we getting to Monday? Are we like, do we have any sight line on where we're going to be?
Well, guess, Tom, I kind of forgot this, but we haven't heard a response from Mexico yet. We're going to hear that Sunday.
Thank you.
So that will be, we've had a whole week of Canada news.
Right.
Let's see what kind of retaliation or response we get from Mexico on Sunday.
We're going to get to Monday with Susanna Hoffs in the Bengals.